Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey everyone, good morning, welcome. Welcome guys, we're gonna get started in a few minutes here. It's NFP day, good morning. Just use proper risk management today. Yesterday was the last day of the month, today's the first day of the month. There could be lots of volatility today. Wrapping up everything, the big earnings week. We had FOMC, and today is going to be finishing it off with NFP. And just trade careful on a Friday, guys. Could be one of those tough days to trade, but just trade with proper risk management. Feel out the markets, and if you're confident with the move and how it's moving and you see a trending market, then you can continue trading. But if it's really choppy, just try and avoid it if you can. We'll see what these job numbers are when they come out. US dollar hit 125 cents on the DXY. So we'll see what's going on. Gold just hit just above 3,000.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey everyone, good morning. Thank you for joining. My name is Ron. My partner is Dave. Welcome to Stocks Network Trading. Today is Friday, 1st of the month, August 1st. It's a very, very, very special day. Who cares about NFP? It's my dad's birthday today. So my father is turning 79 today. So after this session, I'm going to take the old man out for some breakfast and enjoy his birthday. But it is also a big day in the markets as well. It is NFP, non-farm payroll. Numbers will be coming out at 8:30 a.m. Eastern. It is a very high impact red folder in the US. It comes out the first of every single month. So it will give us all of the results of the previous month. So it will directly affect DXY, the US dollar. So if you are trading anything correlated with the US dollar, be prepared for a little bit of volatility, especially us trading gold as well. So all we can do is, we know that there's going to be volatility. There could be some whipsaw action. There could be some choppiness. There could be big range candles. There could be some bigger moves than normal. So all we can do is just lower your risk, use proper risk management so that if you do hit your stop loss or something doesn't go your way, you are not blowing up your account. So that's what we need to learn when we're trading high impact news. A lot of traders do a lot of silly things when there's high impact news. They gamble and then they later regret it. So let's get in a habit of not gambling, using proper risk management. If you do get stopped out, it's not the end of the world. You can still continue to move on and trade with proper risk management. Okay. So before we get into the charts, and again, we're going to look at gold when we do a top-down analysis. We'll go from the daily and bring it down to the 5 minutes. And then we'll watch gold going into COMEX, which opens up at 8:20 a.m. Eastern. 10 minutes later, we'll have our non-farm payroll numbers come out. We'll stick with gold till about 8:45, 8:50. or 9. And then 9 a.m., we're going to start to move into looking at US 30 and NASDAQ so that we can move into Wall Street at 9:30. Okay. And let's get started with Forex Factory, going over today's news. It's been a busy week news-wise. We started this week Tuesday with JOLTS numbers. It's kind of like a little precursor of what's to happen this morning. We had FOMC on Wednesday. Powell remained paused on the interest rates at 4.5%. Gave some remarks and hints that maybe we'll see a rate cut coming in September FOMC. That's on the table. Nothing is set in stone. Again, he will be monitoring the markets month over month until we get to September, and we'll see what happens there. Yesterday, there was some news with the price index, and then today we have NFP, okay? Trump is always in the news every day. He's talking right now as I'm speaking, but Trump raising tariffs on Canada from 25 to 35% effective today. So that's in the news. Also, like over here, he's talking 6:34 a.m. Trump is saying the Fed board should take control if rates aren't lowered. Trump on Jerome Powell, he's too late. Powell is a stubborn moron, must substantially lower interest rates. Those are his words. He's saying, calling Papa Powell over here a stubborn moron. So that's funny. But he is a funny guy, Trump, but you just he talks a lot. And when he talks, the markets move up and down and sideways. So you got to be careful again. So anytime you got to use proper risk management. Might be that cycle where you got to use proper risk management because there's lots of volatility in these markets, especially this summer. There's been a lot going on this summer. Okay, so this is what's going on in Europe. Swiss banks are closed today. Then we moved into London. We had some Spanish, Italian, French manufacturing, German manufacturing news come out, low impact news affecting those regions over there. We moved into 8:30. So this is the big block, this North American block. You see that there's the 3 US red folders. First one is average hourly earnings month over month. So this is the report August 1st. All of the data that will be the actual numbers is the month of July, coming from July 1st to August 1st. This is just a report in August. So last month, the previous was 0.2. They're expecting a forecast increase to 0.3 on average hourly earnings. Okay, so I don't need to explain what average hourly earnings are. I hope you guys understand what that is. So our individuals month over month making more money on average per hour. Okay, so we'll see if that's increasing, the same, or decreasing. Next one is the numbers of the non-farm employment change. So previous NFP, when we did this one, the actual number that came out was 147,000 jobs were created. Okay, their forecast for this NFP is lower than the previous month. It's substantially lower. It's 106,000. It's almost 41,000 jobs lower than the previous month. So they are forecasting that they've created 106,000 jobs. That's the estimate for the month of July, but which is substantially lower than the previous month. Okay, so that's not great, but we will see what the actual number is. You know, maybe they're setting the bar lower. Okay, sometimes they do this where they set the bar lower. So then if this number comes out, for example, 150,000, then it will be green here. They created 150,000 jobs, which is great. Then it looks like they exceeded the forecast by quite a bit, and it's above the previous month. So that would be a good report on non-farm payroll. However, if we see this number, you know, right around, let's say 100,000, it's slightly lower than their forecast. Which is they're setting the bar low. So, but it's substantially lower than the previous month. Okay. If this number is, for example, under 100,000, let's say it's 80,000 or 90,000, that would be a really bad non-farm payroll. Okay. They would be below the already lower bar that they're forecasting, and we're really lower than the previous. So you can see that they're not creating any jobs. If that's the case, what do you think that would happen with the US dollar? How would that impact the US dollar? If you saw that kind of weak job numbers coming out, it would probably be really weak for the US dollar. You'd probably see a lot of selling of the US dollar. And then everything that's kind of correlated with the US dollar, you maybe see the opposite effect. So speaking with gold, if you see disastrous numbers like that, then you could see possibly gold continuing to move up. And but if these are great numbers, we would see strength in the US dollar, and then maybe we'd see some further selling on gold. Okay, so those are just correlations, but the market doesn't always move on correlations. So we'll see what those actual numbers are when they come out. And again, just wait 5, 10, 15 minutes if you want after they release the news, see how things are moving, see if they broke any structure, see if the market is trending, see if it's moving in its intended direction, and you can trade after. You don't need to trade the first 30 seconds when they release the news. If you do, it could be very volatile, okay? And then finally, we have our third red US folder, unemployment rate. This is another very important one. So the previous month, unemployment was 4.1% where it came in. They're forecasting an increase in the unemployment, a slight increase to 4.2%. So anytime unemployment is going up, that's not good. That means more individuals are out of work, seeking work. But if this number comes in, for example, lower than 4.2, maybe 4.1 or 4, that again would be great for the US dollar. Why? Great for the US economy. The unemployment rate is going down. Maybe they're creating great jobs. Maybe our average hourly earnings are going up. That's great. Then Powell would possibly look at this, and then that would maybe strengthen a rate decrease in the next FOMC in September. If we have a strong job market, the labor market, inflation maybe is in check, then that could possibly get a rate cut coming in September, which would also strengthen the US dollar. Okay. So that's going to come out 8:30. Then after that, the day's not over. We got to continue moving into 9 a.m. and then Wall Street opens up at 9:30. We don't have much news coming out of Wall Street. Then you got one red folder at 10 a.m. This is our ISM manufacturing PMI. So these are all numbers coming out of the manufacturing industry over here. And there's quite a few of them. There's the ISM manufacturing prices. Then finally, we have our Friday revised University of Michigan consumer report, and then a few other folders. And then if you're going to trade the mid-afternoon post New York, you don't have much news, but you just got to understand it is a Friday afternoon. It's the first of the month. So just trade careful on a Friday afternoon. It can be very tricky. And then also have a plan going into power hour. Are you going to hold any trades over the weekend? All of those things you need to consider. Okay. So that's news-wise. That's what we got going on. Earnings. Okay, we had big earnings this week too. It was a big earnings week. Specifically, we had 4 big names. We had Meta, Microsoft. Last night in the after hours, we had Apple and Amazon. Okay, and in the pre-market, we also have some pretty big names over here. We have ExxonMobil Corporation. We have Chevron Corporation. So these are the big oil and energy companies in the United States. These impact Dow Jones if you're trading. So this is your oil and energy sector over here. We have Moderna. So pharmaceuticals, guys. If you didn't read the news, Trump applied a lot of tariffs on Europe in the EU, and US gets a lot of pharmaceutical products from Europe, gets a lot of cars, Audis, Porsches, Mercedes, BMWs. There's going to be a hefty tariff on those. So that's going to be passed on to the consumers, unfortunately, in the United States. So if you're looking to buy a high-end German auto car or pharmaceuticals, you're going to have to pay a little bit more. Though that's how tariffs work. Okay. So that's already been set on the EU, and that's impacting the markets right now. And then we have Regeneron Pharmaceuticals. So you see, we have some pharmaceutical companies reporting in the morning. And then we'll go through Enbridge Gas. I'm taking a look at that because I am a shareholder of Enbridge Gas. It pays a nice little dividends over here. It is an oil and energy security in Canada and the United States. And so that's the report. Busy day pre-market on earnings. And then when we get into Friday evening, there's possibly, it's not very busy on earnings on a Friday evening. You might see 1 or 2, but most likely there's no reports on a Friday afternoon. Okay. And then after that, the week is over. then on the weekend, hopefully you can do some little review on your trades, your journaling, maybe do your forward forecast for the upcoming week. You're starting a whole new month, brand new start. Look over your month of July, go back and take a look at things. Are you exceeded your monthly goal? Are you possibly break even? There was a good start and then it kind of dropped down near the end of the month. Is there anything you can work on? Or maybe you're in drawdown for the month of July, and then you got to go back and you got to review, and learn from your mistakes if you want to become a better trader. Otherwise, if you don't go back, you're possibly going to commit the same mistakes over and over and over, and all you're going to do is just continue losing more money at the end of the day. So take your studies serious if you can, and hopefully then, because you can make some more money if you do that. Okay. In the news right now, okay, so Trump unleashes delayed shock for global economy. The economy has held up amid tariff turmoil so far. So that could all be about to change. Today was the effective date, August 1st, for the tariffs. So guys, that's why you got to tread careful today and going into next week, how the markets could react to all of this, okay? You guys know earlier on in April and May when the tariff talk was in the markets, putting tariffs on, taking them off, delaying them, we had a lot of volatility. You guys can imagine that might continue, okay? So just trade with proper risk management. We navigated through April and May with no hiccups. Let's not do any critical mistakes now going into the end of the year, okay? U.S. stock futures retreat as trade war fears revive. Again, we're talking about trade wars again, so be careful trading in the U.S. indices. Amazon stock sinks as cloud results fail to impress. So Amazon is down in the pre-markets right now after their earnings. Okay, Trump and his tariffs over here. July job reports on deck, what to expect. So this is today's NFP. Michael Saylor was in the news. The MicroStrategy reported yesterday they exceeded the earnings by quite a bit. They were forecasted to get negative earnings per share. They actually got in the positive. They beat it by over 4,000% because they reported Bitcoin on their balance sheet, what I was telling you guys. They're down in the after hours, but we'll see if it kind of picks up in the next coming weeks. But Bitcoin is down in general. So that's in the news. Tesla sales drop in Sweden, Denmark, and France for the 7th month straight. So Tesla's taking a little bit of a hit on their financials. What else we got going on? Chevron beats Wall Street profit estimates with record production. So they just reported in the morning. And Nvidia's in the news. And McDonald's plans to double down on AI investment by 2027. Okay, this is what's going on in the futures right now. S&P futures down negative 1% currently. Dow negative 0.95%. NASDAQ is down negative 1.14% right now, and gold is steady, pretty much break even. Okay, so let's just continue, guys. In Discord, we'll have some news coming out. So if we're going to start off with commodities over here. Just a little sentiment report on gold. So it's trading at around 3,300 in the 24 hours. It's up 0.3%. Bullish scenario. The price of gold has shown a slight increase in the last 24 hours. This positive momentum could potentially indicate a bullish trend if we can continue to make some higher highs and higher lows. A bearish sentiment is the 24-hour change of just 0.31 is relatively small and may not signify a significant shift in market sentiment. That's right now. There's also crude oil news and silver. There's a lot of FX news and indices we'll get to later on. Okay. And Telegram and YouTube, guys, thank you guys for joining. If you guys wouldn't mind hitting the like button, we do appreciate that. This is our YouTube links, and you got the free Telegram channel pinned at the top of YouTube. If you have not joined yet, please join. You'll get all of our links to our live sessions and trade recaps throughout the day, and all of the stuff we do here at SST. Okay, guys. Just regarding those trade ideas and setups over here, yesterday was a great day in the markets. If you look at the gold over here, there was kind of a double top sell around 33.10 that moved for approximately 150 pips. So you can see when it broke down, there was that, that patient pullback that came right back to 33.10. You can see it made a double top in itself where it came up, back down. There's the second top, and then second top, second leg traditionally has more volume and is the stronger move coming down. So if you guys got that, congratulations on that move yesterday. And also in the index related SST stock trade ideas over here, you can see here as well, we're looking for sells below 44,605, 600 area. And you got your initial drop too. So if you hit your initial drop, that's quite a few pips coming down. But again, if you miss it, don't panic. This is just like what I always say, at some point there might come back for a relatable retest, which it did here, retested and continued to push down. And then you got the further next lower low, bigger leg. And then again, it pulled right back. And then if you looked at that around 50% point of control of that big bearish candle and you drew a box cross, you see it kind of traded right into it. And then again, that next leg continued to really dump down. So that was on US 30 yesterday. And congratulations if you guys got that sell there yesterday, okay? And then guys, if you want to join the team, we'd love to have you guys on the team, stocksnipertrading.com. We have a lot of education with myself and Dave over here, lots of courses, webinars, live trading sessions, trade recaps, all of that stuff. And our live session schedule is over here. Guys, unfortunately this afternoon I have to cancel today's crash course. It's my father's birthday. I'm going to spend the day with him. Well, I'll maybe record this over the weekend and then I'll upload it on the website for you guys on the weekend. Here's the free blog, guys, available for everybody. How to trade the news. This is teaching you how to trade the news on high impact weeks, which we've had this week. Last week's crash course we were talking about wicks, wick analysis, size of wicks, rejections, exhaustion, all of those things. Okay. Weekly trading routine. Maybe some of you guys want to watch this or read this over the weekend because you're starting a new month, and maybe you need a new weekend trading routine. Okay. Let's get into the charts now. We're going to get into gold. Right now it's pushing at that 3,300 level. So on the 5 minutes, there was this big drop over here. We continued to bottom out, came back up, and slowly it's building its way back up. We have this structural area just above 3,300. We'll see if it maintains it, if it holds, maybe if it goes below it. But we're not going to start off on the 5 minutes. We're going to do a top-down analysis. We're going to start off on the daily. We're going to move into hourly, then we're going to move into the lower time frames, 5 minutes. And I just want to say, guys, yesterday we had a little issue on YouTube. There is a 15 to 20 second delay on YouTube. So, like that could affect, if I say I'm buying, I'm selling, that could affect the delay on YouTube, okay? We have it set on ultra low latency. That's pretty much the lowest we can get it to on YouTube. Our Zoom is live. They don't have a delay. So there's nothing I can do about that, guys. I'll try my best to give like a heads up where I'm looking for a buy or I'm looking for a sell. But when I go into a trade, there is that delay. Like I can't do anything about it. I'll try over the weekend to figure how to make it maybe 10 seconds or 5 seconds, but I'm not a technological guy and I don't know how to do that, but that's how it is, guys. Okay. So that's YouTube. That's got nothing to do with us. And again, watch our financial juice news over here because a lot of news will be coming in. Again, Trump could be speaking, Powell could say something, anything could be said in here. So that could affect the markets going into NFP. And then the final thing is just use proper risk management. That's it. We can't stop gamblers from gambling. It's like when we go to a casino, you're going to see gamblers there and then you're going to see people just having fun and just going there, having a good time. There's going to be gamblers on NFP. Just hopefully you're not that person that's gambling. If you do, just be ready for the consequences. You may lose a substantial amount of money when you're over leveraged in a very volatile high impact news folder. Okay. And again, that's going to be on you. If that happens, I went through that phase. No one was there telling me what to do. I went through that phase. I learned from it. I lost a shit ton of money, but I learned from it. I learned that this is not the way how to trade. Okay, so if you guys got to go through that, the biggest lessons are when we lose a lot of our money. That's when we learn some lessons. Okay, so some of you guys maybe haven't learned a financial lesson yet. Maybe one of you, I don't want you guys to. So I'm telling you, trade proper risk management. You should have a plan right now. It's 7:20. It's 1 hour before they even release the news. You should have a plan. You shouldn't be just guessing when they drop the news, what lot size you're going to do, these things. It should be right now. You should have a well-defined plan. Okay. So let's get started with gold on the daily. I know it's moving right now, and I know some of you guys are in buys, some of you guys are in sells right now. I'm in absolutely nothing right now. I'm just going to do my analysis now to get myself prepared to maybe get into a trade. Okay, so first things first, for all of those who haven't tuned in, gold hit all-time high, 3,500, right up here on April 22nd. And then since the all-time high, our range low we hit was right here. We're 3,120 and it was May 15th. So just looking at the lows from this, we've made a higher low, we made a higher low, and we're making higher low currently right now. But we also have from the all-time high, we've got this resistance right here that pushed down. We got this resistance second time, resistance a third time, and a fourth time. So there's got to be a block up here that's keeping all of this buying volume down and keeps rejecting it back down. So that is considered to be a supply block in the market. And now it's a defined block. We're not guessing anymore. You can see when it got rejected from the all-time high, the body volume closed right there, pushed down. Came back up in the red zone, pushed back down. Came back again in the red zone, pushed back down. Came in again in that red zone, pushed back down. So it's a defined block. We could come all the way back up there and same story. Could come up there and then push back down. However, if we get good closing volume above here, like we did on this day, and this day, we could maybe build momentum off of it. But you see, the next day reaction was bearish engulfing coming right back down, a bearish engulfing coming right back down, a bearish engulfing coming right back down. So they really kind of shut that down for the upside move to the all-time high. Okay, and then also we have this bull flag zone right here, which created some support and demand at this point. Yes, we did break down. That's what caused that range low, but we came back in and barcoded where it was bearish, bullish, and then we continued to go back up. So draw that zone into the future, and you can see we might possibly, if gold continues to sell down here, we might come into this block at some point, maybe today, maybe next week, maybe in the upcoming weeks, we may revisit this zone. Okay, but so far they're holding it up. There was this clue right here on these daily candles where it made these tweezer bottom lows equal lows right there. That's what's sustaining the market, continuing to come back up. And we had this big push down starting last Wednesday, start of last week, the midweek reversal, and it's also continued into this week. Monday, there's Tuesday, again, Wednesday. That's what I said. Wednesday is a critical day in the markets. You could have trend continuation on the Wednesday or trend reversal on Wednesdays. Here, trend continuation. So it's making all those lower lows, came back up lower highs, and then we pushed down on Wednesday. Slowly Thursday, Friday, we're coming back up, but we're coming back up to that point of control area. So it could come up here and then go back down. However, if we can break through here, we might build some bullish momentum, flip this block, and continue maybe to drive back up. Okay, so there is some other points of interest as well on the daily that we can take a look at. But right now, there is a resistance block in the market that's created right here. There was a supporting block. If I bring it into here, into the future, I can start to see that it's turned into a 3-day bearish block, continue push down. So we have this inside block of resistance. This is what could make the neckline right here. This could be the neckline around 3,330. So you see how the market has came down. So far, we've found one bottom right there. It's coming back up. It's coming into 50% of this bearish candle on Wednesday. So it could come in and go back down. But however, if the buyers are strong and fill that wick, we could come back. Then that's the bigger block. That would be the bigger neckline. So maybe that's where it could come up. Then they push it back down. We look for a higher low right here at around 3,300. Maybe we look for a double bottom at 3,275. However, we could come all the way back down and trade into this equal low that's holding gold up, or we'll trade into this big green box down in here. But it could also, get up there, maybe a shallow pullback, come back up, close above there, retest this. This is support now, and then we're driving right back up to there. Okay, so just acknowledge this area, that it's a critical block already established throughout these days in here. Now let's just continue looking below us what we got. So we have this big bearish candle on Wednesday. So can I figure out where 50% or a zone is of that big bearish candle? So I grab my Fibonacci tool, going from the opening to the close of that candle. There's the 0.5. It's exactly around 3,300. There it is. Okay, so we've talked about the psychological impact of that numbers, and then just one standard deviation above, one ratio below. There's your red zone. So you can stretch it across, and this red zone is the point of control as of Wednesday's volume this week. And we've already traded through it. Now we can see. So yesterday, it was a very bullish candle, had a small wick higher than Wednesday. We continued to come up all the way up bullish. So you see the buyers broke right through that block initially. It came up, and that was the high of yesterday. It's still lower than all of this. That's technically a lower high. Sellers came in and rejected it back down, where we closed as an inverted hammer candle yesterday. So it was bullish, but then later on it got rejected, but we still closed with this head of bullish volume. So it's still intact. Okay, so this is still there. So let's look at some point of interest support, where we closed on Wednesday and how we opened on Thursday. 32.75, that nice, again, psychological marker, is holding. Okay, so we do have a little bit of higher low support from here and here. So we are holding some support. We are coming back up, but it could just be another counter move coming back up, and then they drop it right back down. When you're in a downtrend, you see like right here, like the wicks are coming back up, buyers are coming up, but then they slam it back down. Wicks are coming back up, then they slam it back down. This is a bullish candle that actually closed with some bullish volume, but it's a 3-bar play, and you can see it retested in there, and then there's those equal highs right there at 3335, 3334, equal highs, and then they pushed it all the way right back down. So this could be a 2-day counter move coming back up too, and then they could reject it back down. But this is just an inside block from Wednesday. The bigger neckline is up here. So buyers could continue to maybe travel up to here, and then that's where maybe a rejection could occur. Okay, so let's see today if the sellers reject the buyers currently. So now let's just continue with how we closed yesterday. So we closed here and we opened here today. So that's a point of interest. I like to look if there was any gaps, gap up, gap downs. There was no gaps in the market. It was just a transitional close and easy open right around 32.89, 32.90. When we opened, we had our initial bearish momentum. Okay, so it was already came down, and that's our low of the day. And where's the low of the day? It's technically located right at 50%, a little bit above, a little bit below yesterday's point of control of bullish volume. So that's our low of the day. It's still holding technically higher than yesterday, higher than this. So there is a little bit of depth of market strength increasing from the bottom. And when we came from today's low of the day, we came right back up. You can see we came right back to our opening price, 32.90. And the buyers are strong as they continue to have a bullish candle where they came all the way up and we're transacting again in this red zone still. Okay, so that was the high of the day at right now, 33.03. We hit the high of the day, and now it's getting rejected back down. So that's a lower high, lower high, lower high. So you can see that we're in this pennant right now where it is coming down with lower highs, but it is technically coming up with higher lows. So, this is going to be where the battle begins. If we have more buyers asking to trade up here, we could continue to fill yesterday's wick. So let's just mark yesterday's wick in case we break today's high. We could technically get up there. See when I placed the yellow line at yesterday's high? It's like kind of above those bodies right there, 33 15. If you want to bring it down to those bodies, like that point of control, point of interest right there, you can. I'm going to keep it with the fresh volume because yesterday was that fresh high. So I want to see if we can maybe revisit that. Will it break out for a higher high? Will it come up here and be a lower high and continue? But we got to judge when we get up to that purple line if we can continue breakout. But the zone, remember, is this red box. So even if we break out from the high of the day, maybe it gets up to just the top of the red box at 3306. And then maybe it gets rejected there. If you want to place a yellow line at the red top of the red box, that's another point of interest. I don't necessarily do that because I know the top of this red box is a point of interest because I know it represents 50% of this point of control candle. But if you got to do this, if you're learning, then draw a yellow line there because that's going to be a critical point. That's where it broke above and then they rejected it right back down. So we'll see if we revisit this. Right now, we're in a downtrend. So if you see as of last week and this week, it's moving lower lows, lower highs, lower lows, lower highs. But now we have no more lower lows. Okay. So you see it's building its little leg coming back up. But this could be, like staircases going up and then they elevator it back down. So we have to be very careful. Unless daily volume starts to close above here, we could build off of this going into next week and come back up for a little bit of a retracement, okay? But overall, we are bullish on gold overall. Like if we look all the way where it started kind of earlier this year in January, February, like gold pumped to the all-time high. Even this pullback is still a higher low from all of this structure. Even this leg pullback right there is a higher low from all of this. And then even last week and this week's pullback is still technically a higher low. So we haven't really broke any critical levels below us. This green box will be a big one if we revisit this today or next week, And then if we lose this yellow line, then the floodgate could open for new lower lows coming in. We're nowhere near those levels, but we need to consider them, okay? So that's what we have going on our daily candle. Now what we can do is bring it down. If we want to go into the 4 hour, we've been doing this week. Some of you guys, go to the 4 hours. I can go to the 4 hours too. I don't need to just jump into the 1 hour. I can see the 4 hour double top that broke everything down right there. It was Wednesday at 6 a.m. Since then, the 4 hour candles have been coming down lower lows. They came back up lower high. They came back down lower lows. They came back up lower high, dropped again, elevator coming down lower low. Slowly we were moving up. And we sold this candle. I remember this on Wednesday, 6 a.m. Noticing the time, guys, of these elevator drops. Monday, 6 a.m. Wednesday, 6 a.m. Wednesday, 6 a.m. Like time and sales, guys. So this is representing right now what we got going on our 4 hour, 6 a.m. candle on Friday right now. So we do see the bottom established. Okay, so when you're looking at patterns, what do you guys see? I see right now where it came down one bottom. See, there's the neckline. See, there was that 4 hour impulse break, close right there. And then again, it came back up, lower high. There's in the red zone. See most of the volume. And then we came back down for 4, 8, 12, 16 hours back down. But did we come back down to create the double bottom? Did they come take out some more liquidity? No, they held it today at the lowest point of the day. See the purple line? And slowly we're coming back up with this leg. Just previous, that 2 a.m. candle, the London candle, 2 a.m., 3 a.m., 4 a.m., 5 a.m., the European candle right here, it was bearish, 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 bearish. But we picked up a wick and we came all the way right back up. We closed with the bearish volume, but right now, this 4 hour candle opening 6 a.m., which we have 2.5 more hours to go on it, it's pushing right back up. So it looks like it's a higher low double bottom coming back up. So we might technically push, break our high of the day. Maybe we'll backfill some of these wicks, but that's why I have that target at that yellow line right there at 3315. You can see it's relative to kind of, I can manipulate it now a little bit. I can match it up with body, get it more towards 50% of that big 4 hour candle. So I would say around 33.15, 16, 17 area could be where it comes up there, gets that lower high resistance, and then they drop it down. If that's the case on the 4 hour candles, if you get body of volume closing, invert this zone on the 4 hour green, because if the 4 hour candles come back in here, they could pick up that and turn it into support and continue to go back up. Okay, so this is how you can dissect candles from the daily to the 4 hour. Okay, so when I'm looking at the 4 hour, it is overall still bearish. Okay, this could just come up again and then they elevator it back down. But if we start to get some closing volume above here on the 4-hour, we could technically build and get to this red zone and maybe continue to break out. But if you draw trend lines, okay, you draw like a 4-hour trend if you want, parallel channel, you can grab this parallel channel tool, start it from the top, and try and connect the dots or the candles as much as you can. Okay, let me just kind of fix this here. And that's kind of the 4-hour channel. So you see it came up to that top of that channel. They pushed it right back down. Came back up. It's still at the dotted line. That's kind of the consolidated area. We pushed back down. Came back up. Pushed right back down. There's the bottom of that 4-hour channel. Slowly coming back up to that top of that channel. Then they brought it right back down. We haven't hit the bottom of the channel, so they're building it. But right now, you see, we might have a possible 4-hour impulse break coming through here, guys. So we have to really pay attention to this, okay? Because we still have 2.5 hours to go, but this 4-hour candle is building right there. This is where it could possibly break out of the channel. And we know where our resistance is behind us here, but it could break out even impulsively to fill that wick, and then maybe it gets up here, maybe it gets rejected back down, but we watch where it closes. And then if it closes, we flip that zone red to green. We might, find some support and then maybe continue to go back up. It could get rejected and come all the way right back down. So we got to watch also for impulse moves. But it's building, guys. It's building off the bottom, but we still have this selling pressure coming down, okay? Now what we can do is we can move into the 1 hour. Okay, so now this is further dissecting. Now I can see exactly Wednesday, 8 a.m., big drop, 9 a.m., I can see the big drops, Wednesday, 2 p.m., FOMC, come all the way down. There's the hourly support bottom, 3,270, right around there. So if you want to draw like an hourly support zone, right there, you see those 2-bar candles, and then how I placed it right at the yellow line. So I captured all of that. There's that leg where it came down, and what were the results? It went bounce right back up. There's our hourly neckline. So if I stretch this into the future, and if it ever comes back down into here, that could be the hourly double bottom, right? So if you want to add an alert in there, what I'd like to do is maybe right inside 50% of that zone, I'll add a white line because I know the white where I got this from was from hourly, and then I can add my alert in there. If it ever comes back down here in the near future, I'll get alerted and it might set me up in a possible buying a nice healthy pullback in a stronger hourly zone. I can see right over here on Wednesday, 4 p.m. when the market closed. Since then, hourly buyers came in and pushed gold up. It didn't kind of create higher highs breaking through here. So this is technically all lower highs. It came back down. See how it was trading in this zone here with the sellers and buyers. Came down, came back up. There's your double top, lower highs, lower highs, lower highs. You could draw a trend line on those wicks. You see it's descending, and then we continue to drop down. It was trying to break below here. A couple of fake breaks, impulse candles, indecision candles. It continued to push down lower, but now we hit the low of the day at 2100, and then we slowly started coming back up in the futures. And then I can see exactly how London market opened up. There's pre-London. London was bearish, but it's got tweezer bottom lows. Okay, so look at those wicks right there. You see those 2 hourly wicks? So we are holding a little bit of structure. So that's what I'm talking about. If you notice tweezer bottom lows, tweezer top highs, you see how they're holding up the depth of market? It came down there right exactly at 3285. You guys know how important that number is. It came back up, came back down, equal. It didn't break, it's equal. So they're holding it up. And then you have a bullish engulfing candle that engulfed that previous candle. And since then, we've been working our way back up. But here, there's a little bit of resistance. I see a wick, body, and a wick and a body. So I'm going to place a white line right here because I like to scalp the lower time frames. So right there, around 32.96 and 50 cents, I can see how it was resistance, a couple of impulse breaks, no body, volume closing above. Again, another impulse, which hit that daily 3,300 psychological number, came back down. Look at where the volume closed. Again, right at that white line. Then the bearish engulfing candle came back down. Now we have volume closing above that white line, and you see how it's representing 50% of that 6 a.m. candle. So we are technically holding good support, and we opened this hour, 7 a.m., bullish, ignited, no pullback. It's continuing to drive up, but we got to backfill that big wick up to the high of the day. So it's a longer wick. Traditionally when it comes up, it might get exhausted and come back down. So we'll watch this to see if we can break for a new high of the day, or is it going to get rejected and come back down, okay? Possible buying area on the hourly would be right below this neckline. So I'm going to add this green box in this red zone. I know it's probably, what the hell is this guy doing? But this is to show you that this was a red neckline here, in the bigger red zone. So the sellers were there selling, but now we got some hourly volume that has created higher highs and closed the volume above here. So any pullbacks, we're going to see if this 32.95 down to 32.94 can hold support. For example, if it comes down like this, you might find support again and then start to break back up like this, okay? But we'll see if it holds there. If it can't hold this zone, then the sellers might push it below there. If it can't hold, might close it below, and we make it red again in the red zone. We're again right at our trend line, and then we sell down. We continue to sell down where? It's not going to just go down like this. Maybe if the news is that powerful, but I take it from there to the yellow line to about 50% of that bullish candle. Maybe it will come down to those tweezer bottom low wicks. Maybe it will come down to the low of the day. Okay, I take it one step at a time. We are building, okay? And then we do have our official bigger neckline here, okay? So when I said there was a double bottom, see how it's created? But there's the bigger move is this. This is like that when I showed you how it looked on the 4 hours. Down, that's the big bottom. All of this is kind of where the bigger neckline is. We are coming down. So you can consider all of this as one bottom here. It's a higher low, and we're coming right back up to the highest point of the day, maybe to break out. So even if it does break out, you're coming into strong resistance here. I got a wick. Anywhere inside there around 3,000, 311, 312, it could come right back in there, and then they slam it back down. But when they do that, we might be building this red zone into a green zone, might be strengthening, and then get that next continuation push. Okay, I don't know where it will go until it goes, right? All I can do is wait for bodies to close. This hourly candle is closing in 17 minutes. You see it was very bullish ignited. It came all the way up there, lower high, and they've rejected it back down. It's an inverted hammer. We'll see if it can continue to retain its bullish volume, or will it flip into a shooting star and come back down and retest this area, okay? Now I go into the 5 minutes. So these are like kind of our scalp candles. It is moving. It kind of came down here and consolidated down here. If you want, guys, you can utilize the SST trap and gap strategy. When you see something like this and you don't feel comfortable trading it, trap it as much as you can, okay? Like this. And you're smart. You know that there's only going to be 3 moves, but maybe 5, depending with fake outs. So one option is it's going to continue just trading inside here and accumulate with buyers and sellers in that zone, right? And then the other next move is if there's more sellers accumulating, they could push it down, break that, maybe close with some. I don't see any bearish bars closing below there. If they do in fact close it below, it could come back up to retest this. This is support. Closing volume below could turn into resistance, comes back for the retest, or anywhere inside this box. But for example, retest, high probability it could continue to move, push back down this way. The next third option is bullish volume, buyers accumulating, which they are doing, higher lows, bullish ignited candle, retest 50%. We got a body that closed above. So when you get volume closing above, then your next move could be going to the upside, which it just did there, okay? And then you also got to watch for fake outs. Those are your 2 other options. It could come down there and get a wick and go back and close in the box and go back up. I know it's a shit ton of arrows, but or it could fake you out to the upside where it comes up like this and it gets rejected and then it does that again. Okay, so there's actually 5 arrows, 5 paths you got to watch. You got to watch the 2 fake outs, you got to watch your 2 confirmation moves, and then you got to watch what's going on inside the box. So there's basically 5 moves you can add in your playbook. Okay, and that's, again, like we have another one going on right now where it was consolidating. Like you can trap that volume right there. And again, the 3 5 scenarios. It could trade inside there, which it's doing. It could break down, which it didn't do. Okay, so we can eliminate that option. What's the next option? They did fake out up there, came up there, and then came back down. But you see how it's still building at 50%. Then you got your body that officially closed above with no wick. Small retest. There's your pop. Like, look at it. The candle closed with no wick. A slight pullback as soon as it went there. That's it. That's your pop. And it filled that previous wick and continued to drive. So when I'm scalping, that's exactly what I'm looking for when I'm scalping. And when I take that candle, I'm not looking to take this candle for 1,000 pips. I'm measuring to, the line where it could possibly just to fill, like for example, to fill the next wick. Okay, you're up 12 pips just to fill the wick. There's another backfill big wick right there to the that's 35 pips. Sometimes that's all I'm looking for. When it comes to that yellow line, I grab my money and I get out. Okay, but this one had so much momentum that it came up to the highest point of the day and went for 60 pips and then came back down and closed with 25. So you can see the range of that candle. And it continued to come back up. We're struggling at that 3,300 area, and now it's coming right back down. So again, if you want to trap that volume, okay, you can bring it, try and get it as accurate as possible. And there's our volume right now. Okay, so again, it could continue to trade in this zone. It could maybe break out, continue to go up to that high of the day, or we're going to close down below here and then we're going to push back down to the green zone. Okay. And then if you're looking to sell, remember you're selling where there could be some buyers. So if it breaks from here, come to the top zone, that's 17 pips. Come in the middle, you're looking at about 30. Drop down to the bottom, it could be about 40. Okay. So, here we're coming down. This is the impulse candle coming down right now. It's 7:45. This is the impulse break. We'll see if it will impulsively come down there, create a new low. Will it come back up? Will it close down there? Will it close above here? But we'll watch this, okay? So while we're watching this, we do have some 5-minute points of interest right here. This was resistance right over here. Resistance. That body of that candle closed above. You see how the red line turns to support wick, support wick, support wick. So that if we come all the way down there, we might get some support and come back up. So that's a point of interest on the 5 minutes. Okay. And thank you guys, everyone joining on Zoom. Welcome. Good morning, guys. Samuel, good morning. Conrad, Red, welcome. Nigel, Jim, congratulations. Sorry. Oh, you're getting crushed on gold sell. Been in it for 3 hours. Oh, it could break down. I don't know where you're in, but we hit that high of the day. We're back below 3,300. So, Jade, let's see if we can come back down into the green zone. If we break below here, yeah, you could continue to get that further selling pressure. Maybe they came up here, swept the liquidity at the high of the day, and ready to push them back down. But saying good morning, Danny, welcome. DCY, Trevor, Vanita, welcome, guys. SSDN, Tim, Dale, Best Mike, welcome, guys. And everyone on YouTube, thank you guys for joining. Appreciate you guys. We got 300 viewers. If you guys can kindly leave us a like, we do appreciate it. We're getting close to NFP. And then after that, we're going to go into Wall Street and we're going to look at NASDAQ and US 30 as well, okay? So that's what I mean, guys. That's what an impulse candle can be. See how bearish that was? Bearish, 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 bearish. Came down here and look at the response. It picked up a higher low and now the candle has turned flipped bullish again. Okay. So that's the situation if you take impulse candles. It's difficult when you take impulse candles like that. That's why the best advice is to wait for a candle body to close. I know it's very hard when you see a big bearish candle coming down to wait for it to close. You want to jump in and you want to hit that sell button, but sometimes that happens. It comes down and it might not go where you want it to go. It might go down an additional 5, 10, 15 pips, and that you're looking for a bigger move. You're looking for 30, 40, or 50 maybe. And then it catches a wick and goes back up and maybe puts you in drawdown. So you could have avoided that situation altogether by waiting for the body to close. And sometimes, the candles just go while you're waiting for candles close. It's happened to me a million times on these live situations. But at the end of the day, you got to set up some rules and follow the rules and not worry about this could have happened, that should have happened, this would have happened. If you trade like that, you're going to confuse yourself and you're going to have no discipline. So regardless, if you say, I'm waiting for this body to close, That's what it is. Okay. So now in 30 seconds, we're following it. We'll see where and how it closes. Will it close all the way near the lowest point? Will it close halfway? Will it close right here? Will buyers right at the end flip it back up? I don't know. Okay. This is the first candle that's actually breaking below here. And you see how we're still respecting that trend line. Like there was a couple minor breaks above it, but now we're below it. Here's the close of the candle. Okay. So it closed right below. Okay. So that is technically what we're looking for. Volume did close below, and now it is a bearish ignited candle. So you can enter right away without even a retest if you like. However, if you want to wait for the retest, now you see it came down, created a higher low. It didn't drop below that wick. Now it's retesting. Okay. Will it retest 50% of that bearish bar? Will it come back and test this trend line? Will it come all the way and test that daily position? Or will it come all the way and test up here? So let's see. It's a bullish candle right now. It's trying to come back in that consolidated zone. Okay, there's the rejection. You see how it got rejected? Okay, so there was initial rejection. Now, if the selling volume continues to drop, it doesn't have too much of these wicks to fill. Okay, so I'm going to go in on a sell on the rejection. I'm going to place my stop loss. You know, I could go all the way to the daily high. I could go right above this zone right here, above these wicks. You know, or I could go below that yellow line. I could even go real tight, right above, right to 50% of that candle. And, you know, like that would be a good R&R, but I could easily get tapped out of that trade unless I think that this is a shooting star that could just technically just drop. Okay. So you got to judge where stop loss placement is best. I'm going to place it above that consolidated zone. Okay. I feel that that's enough. If it needs to come back in here, I'm giving it more room to get sellers to get absorbed and push down. Okay, so we're looking to come down. Remember what I said, the top of the green box, right there is 10 pips. In the middle, it would be 20. To come down to the bottom of the green box, it could be about 30. And then if we can get it down back down to that red line, that's where all that 5-minute support is. That would be about 40, 45 pip move. Okay, but let's just see if we can get into the green zone first. We are currently below our 9 EMA. Our 200 EMA, you can see it's right below the green zone there, just above this red line. So we've got lower low, lower high, lower low, lower high. We've got a lower high and a new lower low. But let's see, we have 2.5 more minutes to go on this. Can we get some volume closing below? This could also be the one top. Okay, for example, it came up, all of this, one top. We're coming down, probably get a neckline in the green box, and then we'll come back up for that next leg. If it comes back up to the trend line and we get a lower high and we push down, that could be that second leg that's more powerful. It could come back up and create a second top up there. My stop loss is just above there because I don't want it to continue to break out for a new high of the day and continue to take off. So if it gets second top, we could look for that stronger second leg coming down and then officially maybe break. But it's battling, you know, some strong support here. So it could get that next leg up. So what I got to do is we're trading in a big red zone. We're below the high of the day. We close below with volume. So we got to see if these sellers will continue to step in and protect the high of the day and protect this trend line. If the buyers show me that they can break through here, then it's showing me how strong they are today. It's showing me as much as I need to know. Yes, I will get stopped out of the trade, but it shows me the strength of the buyers, and then it shows me the weakness of this red zone. Then it could be turning into bullish, going into NFP. Okay, so this candle's closing in another minute. Rob Mack, good morning. Thank you for joining. Okay, so we got to wait for bodies to close. See, it's technically trading into 50% of that previous bearish candle right there. Below 3,300, below that psychological daily point of interest. Okay, so we got rejected around 50% there. You know, it's even a point of interest on the 5 minutes. There's that body, that bullish ignited body, that retest wick. We got the volume below. So now it's retesting that red line. There was support. Here it's resistance. We got a spin top candle, you know, the indecision between the sellers and the buyers. Ultimately, where will it close? Will it close with some blue volume, bearish volume? Will it close below that consolidated zone or continue to close inside of it? Closed inside of it. So technically it could open bullish and then continue to drive back up. We could get a bearish ignited candle, just continue to come right back down. And then we're moving into 8 a.m. in 5 minutes. So when this candle closes, we're moving into 8 a.m. So just looking at the hourly, because we're going to get a new hourly candle, the previous hourly broke for that high of the day, big rejection back down, but still retained that bullish volume. That's why, you know, it's representing that green zone. This hourly candle opened, it was initially bullish where it came up. You see it's lower than that high of the day. They pushed it back down. That's when I got into the sell there, and now it's coming right back up with some bullish volume. So the hourly candle is kind of like a bullish spin top with 4 minutes to go, but we'll see, 4 more minutes is a long time. So who will win the battle of this candle, buyers or sellers? So I'm just waiting for this candle to close. It's in drawdown. Yeah, I just explained that. The YouTube is delayed. It's delayed about 15, 20 seconds. We know that. There's other ways you can join the team and join the Zoom if you want, and there's no delay in there. Contact YouTube and ask them we have it on ultra low latency. That's good. Then maybe you guys didn't hit the sell, and then you don't have to be in drawdown if there's a delay. Okay, but the volume is kind of right back in this consolidated zone. I'm not trading with large risk. You know, this is kind of in a consolidated zone. I want to see if it will break down. If it doesn't, if I get stopped out, that doesn't mean that's it. It's the end of the day for me. I went all in. No, I'm just using a small amount of risk, testing out, seeing how the volume is moving prior to NFP. It's still showing a lot of strength on the buyers, but we're in that big red zone. So we're going to see, is it going to sellers step in here, protect this high of the day, or buyers are strong? And it will take that knowledge with us going into NFP. I'll verbally let you guys know when I get stopped out around here. Again, I know that there's a delay on YouTube. I've been doing this for 6 years now. I know about that delay. I can't do anything about it, but verbally I let you know. My stop loss is right there. Okay, 1 more minute to go, and then it's going into 8 a.m. So if this is a big, strong candle, it could carry that momentum into 8 a.m. and open strong and cut right through here. And this could be like kind of like that double top that I was talking about, where this could be considered all one top where it comes up, came back down. I waited for that body to close. I got the retest, but it's still like an impulse break too that came back up, and the volume is still trading in this consolidated zone. 20 seconds go. High probability I'm going to get stopped out of this. I could have placed my stop loss above the purple line and still maybe gave it some room to breathe, but when you're getting up there, it could quite possibly come up to the purple line and break out. So I don't want to give any more unnecessary pips away. Okay, here we go. Short wick, bullish ignited candle. That's possibly those tough ones that, they start bullish and then they just go. And look, notice where it closed, right at 3,300, right at that yellow line. So could turn into a strong daily support area and then definitely continue to drive back up here. But we do have few wicks that got rejected here. Will they get more wicks at this area and continue to drop this thing down? And then we got to continue to come back down to 50% of that body of that candle. The 9 EMA is there. Right now we're kind of above that parallel channel, that black line. So this is not looking good for me. It's got a high probability I'm going to get stopped out unless big sellers come in right now at 8 a.m. and start to push this thing down. Otherwise, I'm going to take an L. Okay, so there's a big response of sellers there. Okay, but this candle has to confirm close below here, come down. This could just come right back down, pick up a wick and go back up. Okay, so I don't get excited until I see a confirmed engulfing candle coming down and closing below structure. Otherwise, this could just come down, pick up more buyers, pick up a higher low and come right back up. So, it's nice when you see a big bearish candle like that, but it's got to complete its job. Okay, so that's that double top that I was talking about. I said this whole structure is one top, come back down. We broke the neckline. We closed the volume below. We dropped, okay, but it was just an initial drop. And then we came right back up strong. And then 8 a.m. is the second top where they're dropping it back down. So we have a strong bearish engulfing candle. If it can close below here, then that could continue to cut through this green zone, but again, we need to get closing volume. It could just come down here again, pick up a wick and go back up. So this is a nice candle. It's a great bearish candle, but we need to wait for it to close. 2.5 minutes is a long time. It could come right back up and turn into a hammer and then stop me out and continue driving. Okay. And that would be really nasty if that happens, because you're watching this huge bearish candle come all the way down and look at where it picked up the wick and look how it's going back up. So this is turning into, you got the head of the candle. Will it continue to absorb that? And look how gross that is. Like it completely flipped that. So that's showing you how much strength there is down there. There's a lot of buyers. So it's tough to sell below here. Why? Because, we're just right above that hourly box right here. Good morning, Sonia. Welcome. And then if this flips, 100% I'm going to get stopped out because all of that built up momentum fills that wick and flips. It could easily fill those, then I'm getting stopped out. Then they're going to possibly fill to the high of the day. Maybe we'll see if there's a new high of the day breakout, or are they protecting the high of the day? We will figure that out. Bilal, good morning. Welcome. 100M dreams. I should open a long and short positions and then put it stop loss at 8:28 a.m. New York time. Yeah, that's a great idea. Let's do that, guys. Let's gamble. That was that straddle strategy I was talking about, not to do that. But yeah, great idea. Let's all do that. Let's just put buy signals above at 8:28 right before NFP and a sell signal right below. Have you ever known that market makers will tap both ways? Do you know what a spin top candle is? A spin top candle is technically what you're exactly talking about. It comes right up, tap all of the buy orders that are sitting up there, and then it won't move for the pips that you want it to move, and then quickly flash right back down, come down, hit your stop loss or your sell order. You're activated in both of the cells, and then you're panicking because it's on high leverage and it's during impact news. And good luck with that strategy. And slippage as well. Yeah. Good luck. See, that's gambling. That's not trading. That's gambling. If that's your approach, again, if it works for you, God bless. And that's not my approach. That doesn't work for me. Okay, so how did the candle body close? We closed with some bearish volume. Again, relative to about 50% of that bullish volume. We're still got right at that trend. We are pushing down with a nice bearish candle again, but we've got a wick, maybe possibly get another wick and come back up. If we can get a closing candle confirming to close below here, we could push down. You see how it's coming down again, a higher low wick. It's a hanging man candle. Can we absorb and continue pushing down? So the volume sucks on gold right now, but you know, and we're leading into 15 minutes to COMEX. And then the big NFP news. So lots going on. See, those suck. When you come down and you get those higher low wicks, but what you got to do is you got to continue to rely on this red zone to continue to absorb those buyers, and then kind of an official squeeze. A squeeze would be to close bearish below all those wicks, and then you open and then you force those buyers to think about their trades because now they're in drawdown. Same with what they're doing to me. I'm in a sell. So they keep coming down here, and then if it forces up here, they're squeezing me out of my position, right? So it's both ways. That's why when you're trading in these type of consolidated zones, they're the worst zones to trade. The worst areas. There's no trend in the market. There's absolutely nothing. It's just both sides are accumulating, sellers and buyers, prior to COMEX and prior to the news. And then sometimes when you're in a trade and you start to see this shit where it's going down, back up, like you go and draw down, you come back to maybe a break even, you go in a little bit of profit. Then sometimes when it's like that and I get sick and tired of this, sometimes I just close out the trade, you know, and I'll close either at a break even, I'll close at a loss right now, you know, but I'm not going to let it come and hit my stop loss. Like sometimes when I get tired of watching this, I'll just close and then I'll wait for another confirmation. But I believe that this thing could potentially break down. We're still below the red box. We're below the daily position. We got a lower high below the lowest point of the day. It's just we're struggling with this hourly demand zone. So, you know, when we look at the hourly candle, now we got our nice 8 a.m. candle coming down, but we're coming into that heart of that bullish candle right there. So let's see now, we got a nice push. Can we come down with this hourly 8 a.m. volume? Every time we're coming down, those buyers are asking to trade right there. Like they're getting filled. You know, we're having a difficult time breaking right below where I entered at 32.97. Trevor, you got a lot of wins today, but it's been lucky. I don't think so. I think you're doing really well, but Trev, don't give away. You've had probably the biggest week out of all of us here at SST. Don't do anything silly on NFP. Just, you know what I say. If you're up 20% for the week, right? Just use 1%, 2% for NFP. And then if you get stopped out, you made a good weekly gain. You can enjoy a nice weekend, and you can carry that momentum, that positive momentum with you next week. Okay, don't do anything silly. Guys, wow, that's so much support down here. It cannot break. It can't break. So it's coming back up as a hammer candle. This is the big candle, 30 seconds to go. So this one officially possibly gets stopped out. You can see how much support there is down there. So the sellers are failing to close below there. You guys can see this, like I don't need to explain that to you. Okay, so we closed as a bearish spin top. We opened ignited bearish again. So, but there's a couple wicks that need to be filled. It's not just like one little one and then you open with a bearish ignited candle, it fills that wick and drops. We've got a wick right here, here, and here. So there's a lot of support down here. We're still in this consolidated zone. I know it's getting close to now 10 minutes to COMEX. So this is where the market knows that there's a lot of stop losses up here, right? It knows that. So it could come out, take out, like, for example, me, you can use me as an example, take me out of my position. Maybe there's more stops above the daily high, come up here, take out those stops, and then go down. That's a possibility. The market could do that, okay? But it also knows that there's a lot of buyer stop losses down here. That's what I was kind of hoping for, that the market would come down here, take out the stops. That would be that sell position, and then maybe go back up. But I'm going to probably get stopped out prior to COMEX here. That's why these zones can be very, very, very difficult to trade. That's why when you're trading in these zones, trade with smaller lot sizing. Feel out what's going on. You got to understand that there's buyers accumulating and sellers accumulating. If you go one direction and you kind of go with a big sizing, you better hope it goes in that direction, because otherwise you're going to get frustrated. You're probably going to add more positions and it's going nowhere, right? Okay, so 2 more minutes to go into this. We're going to get a new 15-minute candle at 8:15. You can take a look at the 15s. The 15s aren't doing anything special either. They came up, they came back down. They came up, they came right back down. That was that nice move coming down. But this 15-minute candle has come right back up. So it's going to be tough here because it's like the second top as well on that 15-minute candle. But we did come down, but we didn't close or get down there. So it's flipping now. With 90 seconds to go, so easily could fill these wicks. And then I want to be out of this trade. I'm going to get stopped out there because then I don't want it to start breaking daily high and driving. So this is where we had that big push to the down right there, right here where it is. But easily could fill those wicks, and then that's it. And that's as much as a room I'm giving it. If the sellers don't step in here, I'm giving it a fair enough room for them. And it just shows how strong this bullish move is. Then we got to wait. I got to wait for then COMEX and then the NFP. And then remember those directions I gave you guys? Like when it closes below, it could push down, it retest input, but I got faked out. It was just a minor break, it dropped, and then came right back up. So that was a fake out to the sellers, including myself there. So I got faked out of that trade there. Here's the close. So my close right at the high. Again, watch for a bullish ignited open and then continue to fill. Okay, so it is that bullish ignited open. It's quite possibly going to fill these wicks and then stop loss, and then you've got the high of the day. We're at that 3,300 level. So this could dictate today's direction of gold. You know, if it continues to build above 3,300, definitely have bullish momentum during NFP maybe and continue to break out. But if we can start to push below 3,300, like later on, you know, regardless, even when I get stopped out, I'm still going to be watching these levels later on, because if it comes all the way back down, again, I'm going to be looking to sell below 32.97, 96 area. I'm still hanging on this, but it looks like I'm going to get stopped out here any second. Sometimes I just want to get stopped out of the move just to clear this and then look for another trade. Can't take this anymore. It's like, come on, take my stop loss out and let's end this shit and then start with another outlook. Sellers are there. They're there. Okay, so there's a stop. I got stopped out of that. So you see, I got faked out there. But when I look back at it, I didn't enter on the impulse. I waited for that bearish body to close below what we were talking about. And then when it opened, it initially came down. I waited. As it came up, there was that retest. Then it turned into that bearish bar. That's when I stepped in. So when I look back at it now, I did wait for the body to close. I did wait for the retest. It just strong support down there. It came down multiple times, but you see the sellers failed to really close it below there and drop it. So that happens. And now all of the sellers now are getting stopped out, basically, if you have your stop loss in here. But they're probably going to come and create a new high of the day and target up there. So now I'm out of the trade. We got 2 more minutes to go for COMEX. Got to watch how everything moves into COMEX. And then we got the NFP news. So, you know, and then we're still in this shitty area. It's not trading in a particularly good area, but this is what we're presented with. This is what we got to watch. So now what I'm watching for is, are they going to create a new high of the day leading into COMEX? It's going to be interesting. Okay, so this is COMEX now, 8:20 a.m. Eastern. See how it came right up to that high of the day, almost. Okay, technically it didn't create a new high of the day. COMEX just opened bearish, picked up a higher low wick, but now this is a supporting area, okay? All of this that was previous resistance right here can turn now into some quick little 5-minute support. And you see COMEX just came right into it, got a wick. So flip the candle, easily will take out today's high of the day. Okay, look at the retest now. So that turned from resistance with that body that just closed, turned to support. So it's got the retest and it's a bullish hammer candle, technically ready to take out the high of the day just from 50 cents, but it hasn't got up there yet. So, this has got to be for buyers. They're waiting for this thing to break out. Okay. And if it breaks out, next fill would be that top of the red zone, that yellow daily point of interest at 3306. Okay. And I don't want to buy right now. Like, I'm not looking to buy. Okay. I already just got stopped out of a trade. I'm not looking to just, get back right back in right during COMEX and also prior to NFP. Okay, so it did pop out for a new high of the day. Okay, so we'll see, will it close above that high of the day and continue to push? Are they going to send it back down? Okay, so it's breaking out new high of the day. So just to reiterate where we are trading in this red zone, where do we get this red zone from? So just so you guys know, like, where we're trading, it was from right over here on the daily. From Wednesday's bearish candle. When we looked at 50%, that's why I tried to sell when it got rejected, to retain those sellers. But you can see right now, this point of control could possibly flip. It could turn bullish and continue to go to the upside right prior to NFP, or they could drop it down. But it's getting up there. Okay, so we gotta continue to watch that. Okay, that's on the 5 minutes. That's that big red zone. That's why I got into that sell. When it closed below and then it retested and pushed down, I was looking for the sellers to break that down. And unfortunately, it didn't happen. The buyers are strong. You can see how strong they are. It created a higher low, higher low, higher low, bullish candle, closed above. Now we're getting a little bit of volatility 5 minutes prior to NFP. Okay. All I can recommend, guys, is trade with proper risk management. You got to look at your spreads too with your particular broker, because spreads are going to increase. Normally I have 0.5 to 1 pip spread on gold, I guarantee you that's going to move up to 2 to 3 to 4 pips possibly, or even more. I don't know. It's going to be very volatile. Again, slippage is involved. If you take a trade during high impact news, you might not get filled where you want unless you're using limit orders. So again, just have some rules. Are you going to wait for the news, then trade? Okay, so look at the volume did close up, break for a new high of the day. The 5-minute body did close above that previous high of the day. So it could turn into momentary support and continue to drive up. Okay. Any pullbacks would be here, but with high impact news, it'll possibly, cut right through these zones and maybe test the bigger one. Okay. So I'm going to kind of get rid of this consolidated zone. I'm going to kind of get rid of this right here. We're going to continue to follow the yellow line, the bigger green zone. And if we start to break out above here, our next daily position is 3,316. And above here, there's the 5-minute double top. So if you want to have like a point of interest right there, 3,310. Another point of interest would be maybe like right around here, 313. So you can see when it did come up on the 5 minutes, when it broke above here, 2 tops, and then they dropped it. Again, when they broke out a little higher, there was 1 top and 2 tops, and they dropped it. Then there's your daily position. So that's all above us, going into NFP. If gold continues to be bullish, maybe we got to watch this point, 3,310, this point, 3,313, and more importantly, this daily position at 3,316. They could also be, pushing gold up, and then they're going to elevator it coming down with news. That's a possibility, like that bearish bias that I have could still be there, but the market just came up to, liquidate all of those orders up there, and then maybe they're going to elevator it down. Okay. So, that's what we've got to watch for. What are you guys thinking? What do you guys think of the job numbers? Let's just talk the NFP numbers. Do you guys, for example, what do we got? 106,000. From the previous month, from the month of July up until today, do you think that the U.S. economy created more than 106,000 jobs, or do you think less than that? Because that would dictate possibly where we're going to move with the U.S. dollar. Okay, so 2 more minutes to go. You got tweezer top highs at 3,304 and 1 penny, right up there. Guessing more jobs, Sherry? Yeah. Lee, you don't like making guesses? Good. Yeah. We don't need to make guesses. We'll see the actual numbers when they're reported. So guys, you may see some big candle. Okay. You might see a big blue one just break out of here. You might see a black one break through this. It might cut through these zones like butter. Okay. It's been known to happen. That's why have rules when you're trading. Number 1 rule is lower your risk, lower your lot sizing, unless you're confident 100% in where it's going to go. Increase your stop loss due to the volatility, and either wait for the first 5 minutes, let the 5-minute candle close, let it go do everything it's got to do, and then we can trade after the fact. That's what I'm doing. I'm going to be watching the 5-minute candle. If I want to go in a little lower, I could jump into the 1 minute, but I don't want to do that during high volatile news, especially when YouTube has that delay. That's probably going to be a recipe for disaster. So don't want to do that. We'll stick with the 5 minutes. We'll wait for the official body to close and we go from there. Yes, we might miss out on a bullish move or a bearish move, just how the market opens. If you're already in a trade, you might capitalize on that, but you do your thing. We've got someone on YouTube that wants to do the straddle. So there it goes bullish. Okay, so all shorts are liquidated there. Okay, the US dollar is dumping. So we should see gold moving up. The numbers, 73,000. Holy shit. Okay, so that was when I said they set the bar low for the forecast. They completely shit the bed with that, and that is horrible. And the unemployment went up. Wow. Okay, so that's the worst job creation numbers. That's why you're seeing the US dollar dump right now. Wow. Okay, so they set the bar low to beat that, and they completely shit the bed. Okay, so that's telling you how bad those job numbers were. Wow. Okay, so how far bullish is this candle going to go? So it cut right through that red line. That red line, it's struggling right there. Now it might get up to 33.60 in that daily position, but we'll see where it closes. And then each one of these individual lines we can use as support, maybe to catch a pullback. But biggest pullback will be trading back into this zone down in here. Wow. Okay. Oh my God. Look at the US dollar dumping. Whoa. Guys, did you guys see DXY right now? Look at this. The double top, it came right in there, and look at that. My God. Wow. Holy. Okay. That's what I mean, guys. If you're in a sell or whatever, that's big move. Okay. So I'm waiting for this thing. It's only been the first 2 minutes. We still have 3 more minutes to go. Where is this thing going to go? See, guys, why I got stopped out, and I said, I don't want to play around near that daily high and going into news. So I accept my stop loss and I move out of the way. Oh my God, like the DXY just dropped off the chart. Those are horrible numbers. Okay, not even like, like, wow. Look at, they revised the previous month to 14,000. Oh my God. Wow. Donald Trump. This is the Donald Trump effect. Keeps bullshitting to the people that he's got strong economy. That's showing you right there. That's the labor market. That's the you and I going to work every day. The stock market, yeah, he's gonna say that the stock market is at all-time highs, but stock market doesn't represent the normal working individual. The stock, unless you're working on Wall Street, like if you're a factory worker right now and you can't find work and the tariffs are affecting you, you're not finding work. There's the results of that. And wow, okay. So US dollar is still sinking. My God. It's a bearish ignited candle dropping all the way down. Wow. So where's this thing going to close? 90 more seconds. So if we pull back down to this yellow line, we could look maybe to buy a position off of 33.16. These red lines, like are kind of irrelevant now. This zone now is clearly going to be a green zone now. Holy. Did anyone expect those numbers to come out? Sellers are getting squeezed. Sellers are getting their accounts blown up right now. That's not a small candle. And imagine being over leveraged. This is going to be about a 300 pip candle in a couple minutes. Wow. Holy. Okay, I'm just gonna clean up here. Clean up a little bit of this. Yeah, U.S. private payrolls, actual 83,000. And the unemployment rate went up right at the forecast 4.2. So unemployment went up. Job creation was really, really bad. That's really bad for the US dollar. And that's why gold is pumping right now. So if we're waiting for pullbacks, it could pull back down into this zone. It might not even pull back right now. It's still bullish ignited and continue to go. We're trading in, do you guys know this red zone now where we are? Okay. So when we look on the daily, we're coming to that bigger neckline. Right up here. We kind of cut through that 50%. Now we're coming to this one, which could easily break. So I would target, 50% of that bearish candle right there at 3350 today. If it can continue to get up there. Lisa, you jumped in on the 1 minute. Yeah, no, I understand. But, just any pullbacks. Let's see if we can get just a little bit of a pullback. Okay, it's still bullish ignited. It broke for a new high. This thing could continue to go, but let's see if we can get a pullback. Let's see if we can create any structure off of this huge bullish candle. Hisham, you bought at 0.1 and took profit $200 US. That's unbelievable. That's a big, big return on a 0.1. Congratulations. That's huge. Yeah. That's why a lot of traders trade these big high impact news, because if they catch the move, it pays off. But if you're on the opposite side of the direction, it could be detrimental. But this is going to happen every first of the month. So get used to it. I'm just not even focused on the candles and the charts. I'm just in my head, wow, those job numbers are really bad, okay? Because I told you ahead of time, they set the bar so low that just even a little bit of a good numbers would have exceeded that analyst expectations. It would have been good for the US dollar, but those numbers are really bad, okay? When you set the bar that low and you are that much lower than it, it's just showing you. Okay, so I'm waiting for a pullback. I'm waiting, and there's been no pullback since that news. So I don't want to just buy the high just to say, oh my God, I'm missing out. Okay, because I know if I buy the high, and then that's when they slam it down. And just even if you bought the high and then they just brought it down to this candle, that's a 70 pip candle. Okay, so these are huge volume-based candles now. If we just look at the two candles from it's 370 pips right now. Okay, so if you're trying to trade with a 20, 30, 50 pip stop loss, you're going to possibly get stopped out. So you got to increase your size of your stop loss, decrease your risk, unless you nail a trade. I'm waiting for a pullback. This was a bullish ignited candle, just opened, filled the wick, continued to drive. Yeah, Lee, I saw that. The revision number is from 147,000, they revised it to 14,000. That's that's a big revision. I'm curious to see what Trump is going to say about this. Very curious. We'll see when he starts talking now. How do you even defend that? What would you say? Those are serious job numbers. Those are your average American workers. These are not your billionaires. These are not your Wall Street, the guys working on Wall Street. This is your average neighbor, your average American. Yeah, he'll say too late. It's Powell's fault. It's Biden's fault. It's SST's fault. Okay, so we got a wick. Oh, Joel, I'm not going there. Joel, you're setting me up here, man. I'm live, Joel. Some of you guys always try to set me up by saying something. And I'm just biting my lip over here. Okay, so first bearish candle we can see right here. Okay, how far down is it gonna go? Is it gonna, just even retesting 50%, it still might hold that 50% volume and continue to drive. Okay, wow. Okay, what a bullish move! My goodness. Yeah, right here, guys. So Wall Street Journal's report massive downward revisions to job growth in May, 19,000, and June, 14,000. Revisions show a net change in hiring of negative 258,000 over those 2 months. Wow. Money markets price in 60% chance of 25 basis point rate cut by December now, up from 50% before U.S. data. So we still have that as a September FOMC, but they're already putting some projections in for December. Careful selling the top, guys. You got to be very careful selling up here because this could continue to go. Okay, I would be very careful selling right now unless you see like a bearish engulfing candle close below something, because this is still strong, guys. Those numbers are horrific. So this could continue to cause US dollar to sell off and gold to be bullish. So very careful, guys, selling. Don't entertain sells right now. I wouldn't. It's still making higher highs and higher lows. Wow. And how did this affect NASDAQ and US 30? Okay, so we're going to get to these later, but US 30 is moving bullish. NASDAQ is moving bullish with this news. Okay, but we'll follow that later on going into Wall Street. Okay, so still bullish. Okay, now we're getting to the top of this red box. Our next daily position there to watch is 3,350.54. But from the yellow line to this red box, is there any? Yes, you can see that there was, when the 5-minute candles came up, they went back down, came up, back down. So let's just kind of look at this area with a white line, 3,345. Okay, that would be our next resistance. Wow. Okay, so there's that white line, in between like kind of 50%. I also look back to get that. And at least our runners are running. Amazing. Yeah, trailing stop losses, guys. If you guys got any of that buy, I 100% would be trailing it behind. You could trail this big body candle. There was no pullback. Even that one, if you trailed it right there, 3,330. You could also trail it behind like this. Keep just going up with it. Eventually it will come down, but don't let it come down like an elevator. At least you can retain everything. That's how you can manage your profit when you get a move like this. That's why do not be selling right now, guys. I'm telling you, don't be selling this. I know you think it's got to sell. RSI is probably out of control. Look at RSI, 90, okay? Don't follow this shit indicator. Just follow the news and follow the volume. Right now, the US dollar is dumping right now. Newt, did you get that buy? Holy man. Okay, there's the close. It also closed above this zone. Oh my God. And it's a bullish ignited candle with a short wick. This still could continue to drive up to that white line that we just put, 3345. Okay, bullish ignited candle breaking the wick. This still wants to continue to drive higher. Okay. Wow. Okay. Like, I'm waiting to buy a pullback. You see, I've missed. There was no pullbacks. This was a bullish ignited candle made a high. Like, I'm waiting for a decent pullback. You know, yes, I could have bought one of these wicks, but I had no idea that it was going to drive 400 pips. What is the move right now? 400. My goodness. Oh my God, guys. Wow. Guys, can I just show you guys something on Discord? Like, show you guys what snipers are doing in Discord. Not me. These are the snipers. Bernard. Bernard ate that whole candle. Congratulations, Bernard. What else we got here? Forex Borex. Got that. Congrats. Nice one. My God. New. Holy 3,300. You got that whole move. Congratulations, man. Wow. You guys killed it. Good for you guys. Amazing. Wow, Sherry, you're up 4% on swing positions on sell on USD CAD, EU, and AU. Good. Wow. Good job, guys. Okay, so it's filling right back up to 3,345. My goodness, okay? Like, there's no stopping this bullish train right now. Don't sell yet, okay? Look at RSI, 90, 92. You might even see the first time, guys, RSI hit peak 100. What happens when it hits 100? Have you guys ever seen that? It doesn't go any higher than 100. It oscillates from 0 to 100. Why is NASDAQ pumping? Possible rate cuts in the near future, you know, and good earnings on this week. But yeah, you would think that the markets would be pushing down right now. It's hard to say. That's a completely different what we're looking at right now. We're looking at gold right now. That's a completely different index, security, everything. See, like not even like a nice 50% pullback. Nothing. It's just continuing to drive. Yeah, markets like the idea of lower rate cuts. That's could be why it's rallying. It's because there's hopes of a rate cut coming in September. I just read about December right there. Unbelievable. Okay. You know, like waiting for a pullback at 50% of the news candle, not there. Waiting for maybe 50% here at 3,330, like somewhere inside here. It's not here yet. We hit that white line right there, that 3,345. So when I look back, look, it's retraced everything. There's that white line where I placed it. This was back Friday, July 25th. We were trading there. That was Wall Street's high. We came back here over the weekend, and that was Monday's high, July 28th. So you see where it is, right up there right now, okay? If it wants to continue to go a little bit higher, you know, 3,354, 3,350, that area could be the maximum move before, and then maybe we might get a slight cool off, like just a small pullback to cool this off, but you know, it could just come down a little bit and continue going right back up, okay? So we got now a wick at this 3,345. It's closing in 30 seconds. And remember, if you if you want to go in a sell, right, and it just drops a little bit, that's what it could be. It could just be a little bit of a drop, but the little bit could be 30, 40, 50, 100 pips, and then just grab buyers and go right back up. So you have to be very careful counter trading this. Very careful. I wouldn't even be looking to sell right now. I'm just looking to maybe buy pullbacks. The way how we sell is we got to figure out where it makes a top, when it pulls back, where it makes a neckline, and then maybe it will come back up for a second top and then maybe drop, okay? Otherwise, you're just counter trading, and those could be short-lived like right now. This could be just a bearish candle come down, pick up a wick, and go right back up, okay? So will it break 50% of that bullish candle right there? Will it hold it? Will it consolidate? Are we going to kind of flag, maybe just cool off the market a little bit right now? Because we might keep driving. Man, see, it's still just slight pullback, continuing to fill. This thing possibly wants to continue to drive. Like even a pullback right here to 33.38 would be a nice pullback buy, but this thing maybe wants to continue to drive out here. And the cause of this were those disappointing job numbers. Like when you look back here, wow, like remember what this was prior? It was 147,000. You guys remember when we reviewed this earlier? It was 147,000. That's why I said the forecast, they've set the bar so low at 106. I said it was a difference of 41,000. And then I said, what if this number is like 80,000? It would be a complete disappointment because they set the bar so low and they couldn't even come close to that. And they missed it by 30,000 here. So that's why dollars dropping and gold is pumping. And then you see how they revised it now to 14,000 from 147,000 the previous month. That is horrific. I'd like to see what Mr. Trump is going to say about this. Okay, now we got a bearish candle coming down. So this is the first bearish candle. Now let's see maybe where we'll find some support and come back up. Okay, so get ready. If we're looking to buy pullbacks, this candle is going to close in 2.5 minutes. Will it come 50% down here, back down to the white line, maybe stop right here and catch a wick and go back up? Or is this going to sell down? We're going to find now the official neckline. Okay, so we got a move coming up and then a move coming down. Will it come down here, there? Will it go back up? Will it be like a second time? That's what we got to look for now. This is where you got to kind of slowly put the pieces of the puzzle together. Okay, and some traders are capitalizing on that first sell candle. That's fine, I understand, but you got to understand you're counter trading that big move. That's almost 100 pip candle. Okay, so if you got some of that, you should be maybe taking your stop loss to break even, securing a little bit of that because it could very well come right back up. Okay, just putting it out there. If I sold that candle, that's definitely what I would be doing. Okay, but we're going to close now in a minute 20. Let's see where we'll close. So I got a wick so far. Will this body engulf that previous body? The buyer's going to bring it back up. Will we come all the way back up and then carry some bullish momentum into the next bar and continue to come back up? Let's just see where we'll close. So far, it's engulfing that previous 5-minute candle. It came traded into about 50% of this one. Now it's coming right back up with 1 minute to go. Okay, so let's just watch where it will close. Sherry, I think the entire market is totally orchestrated. It was time for the value of the dollar to drop. It was pre-planned by market makers. I agree with you. It was orchestrated maybe like a symphony, you know, how it came up to that double top right before the news. They knew that there were going to be shitty numbers. They drove the US dollar, they pumped it artificially, and then they dropping it. So, you know, things like this happen. It's the financial markets. But let's watch where this candle is going to close. Okay, it's got a little bit of a wick. It's coming a little bit back up. It didn't engulf. Okay, so it's blue. Okay, is it ignited? Is it holding? Okay, you see it's right there. It's a tiny one. It's blue. I'm going to go in a buy. Oh, buy. Sorry, guys. I hit the wrong button. I'm in a buy. I hit my phone. I'm in a buy. My daughter moved that thing. I'm in a buy. Okay. I'm going to place my stop loss. You could go right below that wick. I'm going to go give it more room to breathe. I'm going to be below that hourly white line. And I want to see if we can continue to come up, force our way back up to those high wicks and continue to break out. Even a halfway break to 3,049.50 right up there. So I'm in a continuation buy. I want to see if we can continue just build one more leg up, but I don't want to have it come all the way down and just tumble down. So I'm going to test this out. I'm in a buy and see if it can make a little bit of a support and have that leg come back up. Isn't it overextended? Possibly, yeah. But I just want to see if it can regain some buyers in this green zone in here and maybe just push its way back up for one more leg. I'm in a really reduced trade here, like reduced risk, just testing this out. It is absolutely overextended, but you know, it could continue to squeeze some shorts up there and continue to build. I know that it could be a stronger pullback here or even down here, but just want to see if it can hold inside here, just retesting this green zone in here. It was a buy, guys. I'm sorry. It put that sell thing up. Just looking for a quick bounce. That's what I'm looking for. It's not there yet. So it could definitely come down, take out the stop, and that hourly position could have been the better buy there. And right after this, guys, I have to go open the front door. I have some contractors coming. I got to leave the door open. They want to start working early. So I got to go upstairs and open the door. I think they're waiting outside on the driveway. Yeah, I should have waited for this continuation to get a deeper pullback. So, yeah, that was my bad there. I went in a little bit too early. Yeah, I'm going to close this trade out right now. I'm not even going to let it come down to my stop loss. I'm closing it out. I want to see where the official neckline will be. Maybe here or come back up. Guys, I got to go open the door. I'm out of that trade. I exited myself. I got stopped out. I got to go open the door. I'll be right back in 2 seconds. Sorry, guys. Yeah, I exited that move, but we'll see. I can hop back in. Let's see here. Let's just see where it created some lows right there. And we're closing in 30 seconds and we're going into 9 a.m. So hourly 9 a.m. candles, 8 a.m. candle is very, very bearish. So we might continue with this at 9 a.m., just continue squeezing. We got maybe more consolidated volume right here. Maybe that's where our flag is. I like that buy. I got out. Yeah. It's okay. We'll see here. And then, guys, we'll stick with this for 5 more minutes. I know it's really exciting, but 9:05, we got to do NASDAQ, we got to do US 30, and we got to get ready for Wall Street, okay? So we're back in that flag. It was a nice little push back up. It could come back down. This is 9 a.m. Let's see if it can pick up like a higher low, continue to maybe drive up here. Oh, man. Yeah, see, that slight little pullback was good enough to grab some pips in there. But, when it's coming down, bearish, yeah, right into the 50% there. Yeah. Should have stayed in it, but. So you're still in this ascending trend coming back up. It's still in this. To sell the market, you got to kind of break below this, maybe break that low, come back up here. And then I'm not saying it's going to come down like this, but it could just come down and test this, 3,325, and go back up. It could come down and test this, 3,360, and then go back up, okay? Just a retracement back to that 50% of the big news candle right there. That's where I'm going to put like a pending buy order in there myself and just wait in there today if it gets filled. That's 50% of the big news candle. There's probably a big tranche of orders waiting to get filled in there. That would be a real substantial discount in the body of that candle. Okay, we're in this flag right now. Again, could just continues come up, down. This is where maybe you'll see like a slight double top where it comes up one top. Okay, we know where the kind of tweezer bottom lows are right there. Coming back up here. Maybe if it's a double, then you'll have maybe a trend line break right there. And then you have a further, maybe a push down into there. And then it could come right back up. Okay, and I know the RSI is out of control. Okay, it's still really overbought at 83. It peaked at 91. Okay, so yes, it could technically come down, but it could just be these. It comes down, gets a higher low, and goes right back up. Okay, so you've got to be very careful with selling. You have to be very careful. You've got to be extremely careful. You've got to wait for a bearish bar to physically close below here, like this one. It came down. If it closed engulfed down there, we probably would have had one more leg coming down. But it picked up those buyers right at 50%. Okay, so we'll stick with this couple more minutes, guys. If you want to stay with this one till 10 after 9, I can do a faster analysis on US 30 and NASDAQ. I'll get them in there. But if you guys want to switch over, I think you guys have done really well. I saw that some of you guys bought that move. Just please, guys, retain as much profit as you can. Don't be risking it all now on Wall Street and trade NASDAQ and with all your profit. Like, if I caught just a little bit of this move, I would have been right now laying in the backyard in the sun right now. I wouldn't even be looking at another candle. Okay, so think about that, guys. Some of you guys have had the best week of your entire life trading, and I know that because I spoke with some of you guys personally, and that's how you want to trade. Now you know what it feels like to have a good positive week. You made some money, you followed your plan, you reviewed your trades. Enjoy your weekend, and let's do this again next week. Some of you guys just got to get that momentum going. See what it feels like for 1 week. Get 2 weeks in. Some of you guys now are stringing together multiple months. Some of you guys now are doing this 1 year, 2 years in a row now. Like it's that's what you want to kind of do. And you're going to have bad days in there. There's going to be bad trading days. There's going to be bad trades you're going to take, and you're going to scratch your head and say, why did I take that? Like me down there, I'm scratching my head. Why was I in a sell down there? Like just those things, and that kind of sell threw me off of the upside move on gold. So kind of that affected me going on the news. So I actually thought that maybe US was going to have some surprising numbers. Those were really disappointing. But yeah, guys, so I got stopped out prematurely. I took myself out of that trade. I had to go open the door, and I wasn't focused to watch this. But yeah, it would have been running in a little bit of profit right now. I would be still in the trade had I been in it. I would be looking to fill those wicks right now to create a new high. But I possibly, if I was still in that, would be at a break even right now. Okay, I'm just telling you guys the honest God truth of how I trade. I would have taken my stop loss now and been at break even and looking to break those wicks. And then just as soon as it would break, that's when I would be securing 80% and doing my 80-20 rule. Okay. But it's still, you see, even a slight pullback is all you need. Like if we just measure from this pullback, that's a 100 pip pullback. That right there would have been my daily goal, just on that pullback right there. But again, yeah, you might second guess yourself when you see a body coming down and things like that. Okay. Okay, so we're going to continue to let gold do its thing. Congratulations on anyone that took the gold buy. US dollar is now consolidating with some indecision. That's why you might get some consolidation on this gold. It could continue to break out high, but it could then maybe sell off during Wall Street. That could be coming very, very soon. Okay, now let's do NASDAQ. We're going to switch focus, guys. I need you guys now. I know you guys are focused on gold. But if you want to learn how to do a top-down analysis, if you want to learn how to trade indices, we have to shift focus. I know gold is the most exciting thing today, but we've seen the biggest excitement has gone by. Now just trade smart, protect your profit. Let's walk into a new exchange opening up and 2 new securities, okay? So I'm shifting focus over here. We're going to start off with US 30 and NASDAQ, okay? So now this has nothing to do with gold. These are not commodities. These are your US indices. Dow Jones is your industrials, okay? That's why it's called Dow Jones Industrial, DJIA. So this is industrials. This is, when we're looking at manufacturing numbers, economy, this affects Dow Jones. NASDAQ is more your tech-related index, okay? So it's affected by Apple and Amazon and Google and Microsoft and NVIDIA and tech. More AI companies and things like that. This is completely different. This gives you an overall snapshot of the U.S. economy. This has got oil and energy securities. Chevron, Exxon Mobil reported this morning. This has a little bit of tech. It's got your big box retail stores, Home Depots, Costco's, those. It's got agriculture. It's got big banks, financials, J.P. Morgan, Charles Schwab, Bank of America. It's got a little bit mix of everything in here, and it's a completely different weighting system. The way how Dow Jones is weighted from market cap, the market cap from S&P and Nasdaq. S&P and Nasdaq are market cap based. You take the share structure, how many shares of Apple are out on the market, and you multiply it by Apple's share price. That will give you the market cap, trillions of dollars, and that will rank them. It's like a sports team. You got the highest ranked team, and then next market caps are below it. And then US 30 is completely different. It's not marked by market capitalization. Its highest ranking goes by the price tag. So the most expensive security is the number 1 with the Dow Jones. So that's traditionally been United Health, because United Health has been $600, $700, $800 a price tag of it. It's come down a little bit. Will it be replaced by a new security? We will see. Okay, it's completely different weighted system. I know some of you guys don't care about that, but other traders do care about that. Starting off on the daily on US 30. Okay, so we've had some earnings. Look at the M top. Okay, so just looking at this, if this was like a 5-minute pattern, we're breaking impulsively right now. Like there's the structure right there. If this daily candle closes below here in the next 8 hours, we could be pulling back up next week, early Monday, and then completely market sell off next week. Think about it, the job numbers that they just brought out. Industrials, job numbers, manufacturing, those are horrific. So we might see continuing selling on the Dow coming in the next week or even today in Wall Street. Okay, maybe they'll pick it up and come back up and then come back, test these levels and then drop it. But right now it's trending down. Let's go overall now. We had the double top all-time high supply right here. Guys, I'm going to talk a little fast now. So I need you guys, whether you understand what I'm saying or not, I just got to continue going because I'm looking at the clock and it's 10 after 9. Okay, there's one top, double top, all-time high. We came in here again. We briefly broke through it. There was the new all-time high set at 45,155. You can mark it. I like marking all-time highs with Donald Trump's orange face up there. There it is. There's Donald Trump's makeup. There it is, 45,150, all-time high break. What's happened since then? The volume came back, closed below, retest, lower high, lower low, come back up 50%, lower and continue dropping, come back up, came back up, lower high, dropping, continuing off of yesterday's volume, dropping, breaking. There's your M pattern, up, down neckline, second top, liquidity grab, and dropping. Is gold continuing to pump red? Okay, so right here, there is a zone. Remember, we've been looking at this zone right there where we said it was support with those tweezer wicks right there. So if we draw it across, see guys, I got to go quickly. There was the bearish candle that went below it. Move your zones red. See when we came back in it, sell, okay? Continue going across. You see when we were closing above it, you see how it held support right here? And that's where we knew the neckline was right there, where it came in. Now I'm drawing that zone across. We are below this zone right now. I cannot officially make this a red zone until today's daily candle, because that's what I'm on. I'm on the daily, officially closes below here. So that is a zone. It was a green zone, and we're cutting through it right now, impulsively on the daily. I can go into the 4 hour, I can go into the hourly, I can go into the 15-minute and find out where the volume is closing on those particular time frames. But on the daily, we're cutting through it right now, okay? I'm not going to detail everything, okay? But if we continue to drop today, where is high likely we're going to go to? Maybe, possibly, 50% of this bullish candle, open close half of it, and that's our low of the day right there, okay? You can see the low of the day has already been placed with the wick, 43,650 on the dot, and it's representing 50% of that bullish candle. Next point of interest is right below us, body to body, 43,430, 435. Draw a yellow line right there, okay? And then next one, below, 50% right there, okay? I can continue to do this all day, every day. Just drawing these lines. Do I have then a new zone? Yes, you can see it right there. There was resistance, turn to support. There's your next green zone with points of interest below us, okay? Now, what do we have above us, okay? We've got, I'll dissect today's daily candle, but look at yesterday. Yesterday, can we pinpoint 50% of yesterday? Yeah, it's right there. We're still below it. 44,350. So even if we pull back, you still can continue dropping down, okay, in the next week, okay? So today's daily candle, real quick. Yesterday, we opened. It was bullish. Faked out the buyers up there. The lower high brought them back down to the opening price. Filled Wednesday's wick. We came all the way down and we closed strong near the low. Today, open, close, point of interest right here. It opened 44,130. Buyers were interested right at the early part of the day. And what happened? It's a lower high at the high of the day. We're still running off of this big downtrend, making lower lows, lower highs, lower lows, and hit the high of the day, came back to the opening price, filled yesterday's wick, completely dropping right now on the NFP, filling July 16's wick. Okay, so where is that lowest point? Right there, let's put a point of interest. We see we cut right through it, so it did create a lower low, but we found the bottom so far, and now it's coming right back up, okay? So out of this volume that we still have left in it, can we find exactly 50% of this current volume? And I know it's moving, but this will just give me a snapshot of right there. There's 50% of today's volume. Today has got bearish volume, so what I could do is I could draw a bearish red box just to let me know, heads up, that this has still got some bearish volume on the daily, but we are trading in that demand zone, but we've officially cut through it, okay? Now, overall, what do we have on the pattern? Look, it's a double top with liquidity grab. You know, if this was a 5-minute setup, where's my pathway? Who's been changing this shit? Okay, so it came up, back down, came up, double top. There's the liquidity grab at the all-time high, and there's your drop. Your second leg is your stronger leg coming down, and it's stronger. It broke that low. Now, if we officially closed below here today, we might come back up next week early, retest this. Make sure you flip that big green zone red because it could further be coming down. Okay. Just on those job number reports. Okay. Once the street digests all that, and wow, gold is still pumping, guys, and dollar's still dropping. Okay. So on this daily, I'm going to go right into the hourly, not onto the 4 hour. I'm going to go quicker here. Hourly, lower low, lower high. Lower low, lower high, big drop right there. So there was the big drop, 3 a.m. London. So London had a massive drop coming down. So you see kind of it came back up right into London's volume, still like right at exactly 50%, and they slammed it down, okay? So we do, I'm going to get rid of that green zone now because we're not on the daily. That will be later on when I do my analysis at the end of the day to see where we closed on the daily. But right now, the hourly, you see it came back up to London, 50%, and got rejected back down. Okay, so we might be now consolidating. Right here, we've got some hourly support currently, the lowest point of the day right there. That's hourly support. We'll see if we build some bottoms down here on the 5 minutes. And maybe we come back down, building, okay? But this could also come right back up and continue dropping today, okay? So if we look at the overall hourly trend, it's in this parallel downtrend. Just connect the dots here. Okay, so see how I connected it there? That was the official bottom, came back up below those dotted lines, continued to break. Now we're trading inside here. It could continue come back down, but it's still pushing down. We're still got volume in this trend. It did initially break, but we could break even further down there, okay? So it is dropping down on the hourly. 5 minutes. I can hear that the workers are here, guys. So you might hear some noise in the background. Got some guys here helping out with the renos. But look at now on the 5 minutes. Okay, so we just dropped right here, 43,650, coming back up. What time was this? This was 7 a.m. Eastern. Here's the big news, NFP drop. It kind of got gobbled right back up with a bullish engulfing candle. Came right up, hit that high, and now we're slowly coming back down. So we'll follow this volume into Wall Street. We'll see what's going on. Right now, it could be a little choppy going into Wall Street in the next 15 minutes, okay? Add daily bar indicator so we know what's going on. We opened high, a lot of bearish volume. We just created that low of the day right now, and slowly it's been coming back up, but we still have this heavy selling pressure above us. And we still have that big hourly zone, and it's coming from London. There's London, 3 a.m. right there. So we still have London supply above us. This could continue to push down unless Wall Street can pick it up and test London's supply up here, okay? So that's US 30. We'll keep it on the left side. We'll add EMA 9, EMA 200. EMA 200 is in London supply up here. It could come down. And we're currently below the 5 minute EMA 9. Okay, so I'm keeping this. Sorry, guys, for talking fast, but I'm keeping US 30 right over here. And NASDAQ. Okay, so we'll do NASDAQ real quick. NASDAQ is a completely different security. Remember, this one follows tech. Okay, so I'm going to do this one a little quicker. I'm just going to, we'll follow these 5 minute candles. It's very similar to US 30, making lower lows, lower highs, new lower low, kind of dropped, made the low of the day right there prior to 7 a.m. We came back, very similar move to US 30 on NFP, drop, bullish engulfing candle, come back up, hit in here. That's just after 4 a.m. London volume, and they kind of pushed it, continue, come back down. So we're going to see in Wall Street, are we going to come back up a little bit, or are we continuing to sell off? What I do when I do a quick analysis like this, add my daily bar indicator. Here it is. So I see my opening price. When we opened at 6 p.m., right over here, we opened. So there's my yellow line at the opening price. We initially moved up bullish just a little bit. That's what created the high of the day right there, purple line. And since then, you see the drops, okay, coming down, bearish, 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 bearish. We just made the lowest point of the day right there at 6:55, 7 a.m. We got a low already established. And now we're just slowly, we came back up, but they're dropping it right back down. So still big bearish candle on the daily. Any structural zones we can see on these 5 minutes in between, like this purple and this purple line. Right here, there was a little bit of a bounce in the market. where it came down, got that wick, came back down, another wick, and went back up. Let's continue to carry this zone into the future. Now we got volume below it. Let's just transition it to red to illustrate that if we come back up here, this could be a selling zone. What I mean by that is if it comes up like this, it could go back down. It could come there and create a double top there and drop, okay? That's one point of interest. Another one is right here. You can see they've already done something here, which was support, double top, drop, stretch it into the future. I see that it broke out during NFP news, kind of fake out, and brought it back in under there. So that's another zone that we definitely need to watch for Wall Street right here, because Wall Street could, continue to come up here and drop. Possible. Okay. If Wall Street reverses the move and closes above here, it's already peaked its head up at NFP, peaked its head up, close above, maybe retest this, we could be driving back up to fill that imbalance up to there. But you still got to understand that you're driving into a big bearish daily candle that could absorb you and continue pushing you down. So that would be counter trading today's move. And then now if we continue to break down our daily low and drop, below this purple line, let's look at last time NASDAQ was trading below this purple line. Here's some structure. I can see Wednesday, July 16, that big dump right there. I can see, is there any critical levels? Yeah, just look at this where there was resistance right there. It turned to green support right there. Stretch it across, green support, support. So if I 22,850, so bringing that across all the way to trading today, and then just some points of interest right there where it dropped, it held. So if we break today's purple line, maybe we get saved at that red line, 22,875 before trading in that block. If this block doesn't hold up, then there's that spike down there. Just some points of interest. I would go more with where there's some bodies there. Okay, so definitely let's watch that. Okay, guys, and just adding EMA 9, EMA 200. I'm going to put these charts side by side. I got to go upstairs for a couple minutes, and then I will be right back. I just got to make sure these guys are okay upstairs, and I will be right back just before market opens, okay? So I trust that you guys can watch these charts. Just a recap on gold. Gold is still driving shit right up to that daily position. Beautiful move. So yellow tape, cut through that one right up to the next daily position. So that's, and we'll watch this in a second. I'll be back in, guys, in 2 seconds. Sorry, guys, it's getting real busy in here. I got a couple contractors upstairs, an electrician and plumbers working together upstairs. Okay, so we're going to watch what happens in Wall Street. Let's just go quickly over the news so we don't miss anything. 9:30 has some Canadian news coming out, manufacturing PMI. 9:45, there is some U.S. final manufacturing PMI coming out. And then 10 a.m., guys, at 10 a.m., I got to wrap it up. I got to get out of here. I got a lot of work to do today. And so it is another U.S. red folder right here. ISM manufacturing PMI will be coming out. And then you have a few other U.S. folders. So 10 a.m. could get a little volatile as well. Things could settle down around 11 a.m. Then Wall Street kind of takes lunch break. There could be some consolidation. And then there could be one more final move going into the close of the market. Again, if you're going to trade and hold positions over the weekend, news could drop over the weekend, everything. So just have a careful trading plan, knowing everything. You guys got to know this. Should be automatic. You should have a trading plan. Okay, so wow, gold continuing to drive. Congratulations, guys. Holy shit. What a move that was. Buy gold right now, Pascal. For me, it's it's kind of tough now to buy it. Okay, I was in that buy, man, and I eliminated. I stopped myself out on that because there's too much going on. I got guys calling me, going upstairs, and you see when you lose focus, it kind of takes away from your trading. That's why, guys, you got to be very laser focused when you're trading. You have to be focused because I had that pullback buy on that candle, and then I stopped myself out because I walked away, and then now look at what I missed out on. So it happens. But you see what I mean? The pullback buy was appropriate, right? So just that was the first bearish candle that pulled back, and look at it now. So, even when the RSI was all overbought at 90, I still bought that pullback. You know what I mean? So don't always just go with RSI and just sell anytime. Look how overbought it is, because if you sold and you didn't do anything, you're in massive drawdown, or your account could be. These are big moves. Like one of these candles is a huge candle. Okay, but we got to focus over here. Pick your security, please. Dow or NASDAQ. We got levels above us. Remember, this is a red box above us. This is a red box. We got a daily point of interest. Here we could break our low of the day. Maybe liquidity is down there too. So don't forget that there's liquidity. They could break it and then come back up. But if it breaks and closes below there, it could use this as resistance and we're continuing to drop down. We've got these red lines on NASDAQ to let us know that there could be an initial support right there at 800 support. And then if it continues to drop down, we got to go back and do some analysis, okay? And similar with US 30, we got our block above us. I know that this is London's supply because I know it's right over there, 3 a.m. And that was the hourly block coming from London. The 200 EMA is there. So if it comes back up, that might be an opportunity to sell with the market back down. We could just break this low of the day and continue to drop down. Excuse me. But then we have to watch this yellow line, 43,425, this yellow line, and that yellow line. Then if it comes all the way down there, you're coming in a bigger green block. That could be a nice buying area, okay? If it comes all the way down there. Just please, guys, trade with proper risk management. You guys know the drill. Don't do anything silly. If you do, then just be prepared for the consequences. Check out your spreads. Make sure if you're transitioning from trading gold, maybe gold has different contract sizing, lot sizing with your broker. Make sure you guys adjust everything because we're moving to a whole different security to trade. You don't want to make those mental errors, okay? I know we've all done it before. Do you guys hear that? They're drilling in the walls right now. No, you guys can't hear it? I made this room soundproof, but you can still hear. I can hear that they're drilling right above me. Okay, that's good. Then it's testing out the walls then. Okay, we got about a minute 40 to go into market open. So let's see what happens. Again, have rules, okay? Yes, you could just trade away like how NFP opened, and if you were in a buy on and you caught it, great. Markets could open like that too. But again, is that how we're going to trade, or are you going to wait 5 minutes, wait for a body to close? Where will it close? See the range. Some traders wait till 9:45. They wait for a 15-minute entire close. See where the 15-minute, how high it went, how low it went, where it closed. Some traders forget they don't even trade Wall Street. They wait 30 minutes and then they trade 10 a.m. 10 a.m. is a new hourly candle, and for some securities, a new 4-hour candle. So, every trader has different rules. Make sure you have your own rule and you follow it consistently on a daily basis. The more you stick to that rule, then the better you will get because you'll learn a lot from it. Every time you switch away from the rules, you could confuse yourself. Okay, so just stick to your rules, stick to the plan. I'll be waiting 5-minute candle close. Okay, we'll keep it consistent. Okay, so right now, 30 seconds going into Wall Street, we see NASDAQ and US 30 moving up bullish. Will they close? Will it close above this daily position? Here we go, guys. 5 seconds. Okay, so it did initially close, dropping. Look at how bearish NASDAQ is coming down. Amazon is down 7.2%. Amazon after their earnings, pretty disappointing earnings on Amazon. Okay, so it came down, caught a wick, still bearish head. US 30 came up, right away back down, caught a wick. This is the first 30 seconds. I know it looks very tradable, but again, it's 30 seconds. You see, when you have a rule for 5 minutes, 30 seconds, 1 minute, like you just want to jump in. You feel like you just want to go in. If you have that intuition and you want to go in, go in. But you know, rules, if you're waiting for 5 minutes, I know it's horrible for me as a 1 minute scalper. Do you know how hard this is for me to wait and not take a trade on this? It's killing me inside. Like, it's literally killing me. But like, that was a perfect selling candle. But again, I told you, I'm going to wait 5 minutes to see where and how it closes. And yes, I admit, guys, I missed out on selling this candle. But that's, if you want to go and trade right at Wall Street open in the first 10, 20 seconds, then, you know, I would suggest go to the 1 minute candles. Don't even look at the 5 minute. Okay, look, we're going to break the low of the day now. Okay, so let's see where it will break, how low it will go. We got purple and yellow lines. When was the last time Dow traded in here? 5 minutes, 15, I got nothing. 30 minutes. Okay, so I can see there was a point in time where it was trading down here. So you see right there, see when these 30-minute candles made resistance into support? Let's just draw like a line right there just to let us know that if it gets back down there, that's where it was, could be a point of interest. Okay, there's the white line. We're coming down to it right now. Will it close below here? Will it catch a wick and go right back up? Okay, so NASDAQ came close to the low of the day. It's got a higher low. Still got this bearish engulfing body. Half of it is exhausted. 2.5 more minutes to go. Gold, yeah, retracing back down a little bit at that daily yellow line. That's why it's important to know, look at these yellow lines, okay? See how this one closed and went right back down at that 43.75. Why? Because we got this from a daily point of interest. That's how powerful the daily points of interest are on these lower time frames. 1 minute, 3 minute, 5 minute, 15 minute. Okay, so NASDAQ is now breaking its low of the day for the first few minutes of Wall Street. US 30 already did. Will it close below here? If it does, then maybe we can sell a pullback. We can determine where 50% of this candle is. If it comes all the way back up and closes here, it might be a buy move coming back up. Where's the current resistance on gold, Josie? Right over here. The yellow line, 3,355. Okay, we put that yellow line when we did our daily analysis. Okay, just looking at the overall stock market, all tech is down right now. Like AMD is down 3%. Micron is down 3%, Nvidia is down 2.5%, Meta is down 2%. Microsoft is down 0.5%. Google's down 1.5%. Amazon is down 7%. Tesla is down 1.5%. Apple is the only one that's green right now, up 2.25%. SoFi is down 6%. Palantir is down 3.5%. SMCI is down 3%. Even big banks, JP Morgan is down 3%. Okay, so overall red in the market. Intel is down 2.5%. Ford is down 2%. Volatility is up. VIX is up 13%. So we got a lot of volatility. That could bring selling pressure into the markets. Goldman Sachs is down 3%. United Health is down 1.25%. Someone's calling me on the phone. I can't answer the phone right now. What else we got? Someone's calling right now. When I'm reading those out, someone wants some trading tips on the phone. We don't do phone calls. Okay, so it did close below there. Technically, it did close below the lowest point of the day. So I got to go green to red, just follow the rules. You know, like we did close below there on NASDAQ. So like right here, there was some initial support. Now closing below. Let's see if it can still stay below there. Okay, so we've got an initial rejection and a push down. Okay, where's the best likely place to sell? I would determine where 50% of that first 5-minute Wall Street candle is. If it does come back up there, there it is. There's that point of control of Wall Street's candle bar right there. Okay, that red, I could do the same for NASDAQ. So what I could do is maybe just eliminate this red zone and follow this one right here. Same with maybe this one. I could lift up a little bit on NASDAQ in case it wants to come and really retest right in there. Okay, see how I caught it right there. Okay, so if we get a pullback, you know, and a proper pullback. I know it's dropping right now, but remember those proper pullbacks, you know, could come back up in there and then drop. Remember 2 times this week, I kind of sold this kind of candle and then I placed my stop loss above the red zone. Then it came right in there and tapped right in there, then went down. I still made profit on the trade, but I had to encounter drawdown because I sold this candle quickly and then it came up the next bar to retest. So that's what I'm doing with US 30. I'm going to see if it will come back up and maybe retest this. But so I might miss out on this candle. That's the way how it goes, guys. You know, I did that 2 times this week and it kind of came back up there. So now if I just go in, I just got to know I'm going to place my stop loss above there. I'm already measuring the move in my head. I can calculate from the purple line into there. I'm looking at the numbers. So I know how much distance it is from, like, let's say, for example, selling right here up to there. You got to place at least to be up there just in the red zone, 70 pips, right? So it goes up to 90, can be 100 pip stop loss. So I have to calculate what lot size I'll be using if I'm going to do a 50, 60, 70, 80, 100 pip stop loss. Normally I'm trading with a 30, 40 pip stop loss. So that is 2 to 3 times more than the stop loss I use. So I cannot use the same lot size. I have to substantially decrease the lot size unless I wait for that proper pullback in that zone. Then if I hit it there, if I sell there, I can maybe place a stop loss just above that yellow line and it's a shorter stop loss. But, you know, let's just wait it out. Let's just see what happens here. NASDAQ broke down to that red line. Spin top candle could come back up. We could also get that retest in there. Just got to patiently wait. Maybe it might not be this candle. Maybe it might be the next one. Maybe it might be 9:45. Maybe it might be 9:50. Maybe it might be 10 a.m. But what I'm going to do is place an alert right in there. Because if I go help the guys upstairs, I'll show them how we can scalp and we can do some plumbing and we can do some electrical work. I'll show them. I'll teach them how to trade. They're tradesmen, so they can teach me their trade. I'll teach them my trade. Okay, we got 90 more seconds to go. So NASDAQ found a bit of a bottom coming back up. US 30 wants to continue to push down, but I'm watching those lows too, right? It hasn't created a new lower low as of yet. We still have that white line position below us. Okay, so there it broke for a new lower low. Let's see if it catches a wick at this white line area, maybe to reverse back up. Maybe we could catch a quick little pullback 50% here and continue dropping down. Or this purple line, okay? Doesn't always have to be right back in that zone. But you understand, like, I'm looking for sells. I want to sell with the market, but I kind of don't want to sell the lowest point. I'm looking to sell a pullback. That's, you got to wait for these. Sometimes they don't come. That's the patience involved. Okay, and we're going to close in 30 seconds. Gold. That gold is starting to move down. So that you could consider this to be the first top of gold. Okay, so that yellow line came up, coming back down, maybe find a neckline somewhere in here. Maybe if it comes up later today, second top. That could be an opportunity to get that bigger drop, okay? So place an alert. I'm going to do it. Place an alert at this yellow line. If gold ever comes back up there later today, I could be looking for that, okay? You don't have to force trades. Let them come to you, okay? So this is continuing to close near the low, ignited, and continuing to drop. Even if I'm just waiting for a pullback into 50% of that previous candle, like you got you got to either go in on the sell now and place your stop, or you got to wait for the pullback. I know it's difficult to do this because we're watching it just bleed down, but other days you'll appreciate this approach because not every time when you sell the bottom, that's the worst thing to do is sell the lows. We want to sell at a premium area. And it's also the worst thing to do is buy the highs. We want to buy the pullbacks. But sometimes when the market is moving with a lot of news, you don't have that opportunity to get these pullbacks. So, but on a normal day, like let's say it was just a regular Tuesday, you would appreciate this approach. Right now it's breaking because there was breaking news this morning. Those job numbers rattled the markets. Okay. So if you want to get in the habit of just continuing selling lows, do it, test it out, and let me know how journaling, how it goes over time. I know it sucks on these live calls. It sucks for me too, because I want to buy like that gold. I wanted to be in a buy, but I was waiting for a pullback and I never really got a sound pullback. Even this, I wanted to sell right away at market open, but I'm trying to wait for bodies close and show waiting for a pullback. And it sucks on these live calls because I'm missing out on some good moves. I understand that, but I'm just trying to teach you guys how to trade with discipline, and you gotta get used to this, guys. If you don't get used to it, I don't know. If you think every day is going to trade like this, you got a lot to learn. Is this gold pullback? Yeah, it's trading right back in that kind of consolidated zone. Yeah, a better pullback would be in the green box down in here, but it's still holding. It could definitely go back up for, and then you're getting that second leg back up there. That could be where they're establishing bigger sellers. It could definitely break out of there, and you got a higher high. Yeah, definitely. United Health reached a 52-week low at $245 a share, and US 30 is still dumping, guys. Wow. See, I can't even kind of get a solid pullback like at that purple line at this red box. NASDAQ was that brief candle. Yeah, guys, I hate this on these sessions when this is happening. It sucks, believe me, it sucks for me because if you look at the 1 minutes, the 1 minutes tell a beautiful story. Even the 1 minutes kind of came up, retested that, the bear flag, drop, retest, dropping. Look at the 1 minutes, broke, came back up to the purple line. Even the 1 minutes were really proper. So, but I don't suggest going to the 1 minutes unless you have experience with those. So now, like when we figure out this move from the range, from the NFP numbers to maybe when we can establish a low, you can take your Fibonacci from that highest point when they release the news to, let's say, for example, this is the lowest point right now, this candle. I'm just saying, for example. And then when we're looking for retracements, kind of got to flip this, reverse this, because the first retracement is 236. So there's 236, there's 382. You see where I'm waiting for a pullback? 0.5 right in that red box. Like if we can get that pullback, that's that golden zone. There's the 61851 0.5. So you see why I'm particularly waiting for it to come back up and then sell that move. But the market is not pulling back up yet. It's completely dumping, could be off of those job numbers. But 10 a.m. we have new news coming in the markets, okay? And that could change it. But overall, today's a selling day. If you buy today, you're buying counter pullbacks. Listen to what I'm saying, because it's making lower lows, lower highs, new lower lows. Look at this huge bearish daily candle. If you're buying against this. So it could be a little short pullbacks, and then the sellers are waiting for you. And so if you're buying and you're up 30, 40, 50, 100 pips, you better do something, I'm telling you, because you're going to get absorbed and then they're going to drop the elevator on you. So don't piss away money, even if you're counter trading. That's where you have to have a real specific counter trading rule. Same with gold. Like, if you want to continue selling, yeah, you might get a few sells and catch your pips, but you're waiting where big buyers are waiting in here. You're waiting here. There's buyers. These buyers haven't even been activated. This is the fair value gap from NFP. That still hasn't been activated. This zone right here, 3332, hasn't been activated. So there's a lot of buyers waiting that missed this NFP move, and they're licking their chops right now, waiting for a pullback. So if you sell into them, you got to understand you're selling into where the buyers are. That's where you close your trade. You close where the buyers are. If you're selling at a high point, you want to exchange, shake hands, transact with the buyers where they are. Realize your profit, and they'll exchange it and they'll take it on the way back up. Wow, the markets are completely dumping right now. Holy. So now it's dumping, excuse me, US 30 is dumping to a daily point of interest, this yellow line. Okay, so this is where we might find a bottom. Okay, so now if you're looking to maybe possibly buy a position, it could be right here. Okay, it's completely dropped. Okay, if I measure the move, this big move from the news, we're dropping down approximately 430 pips. Down there, it could be about 500 pip drop. And it's a daily point of interest. So down there might be buyers, okay? This is where it might come down and maybe possibly make like a double bottom, where it comes down there, maybe goes back up, creates a neckline somewhere because it will get pushed down again. Maybe if you get a double bottom, that could be maybe an opportunity later today to take a counter buy, take it back up to there, take it there, take it there. But you got to know when you're taking back up, they could slam you back down, okay? So if you're looking for a buy, I would suggest maybe wait, place a signal in here, because you could be waiting for maybe a buy signal in here. You still have your sell signals up here. You just got to let the market settle down when it figures out where it wants to consolidate. Okay, even here, will this bullish candle just get above 50% of this previous bar? It's going to close in 2.5 minutes. So maybe we figured out where a bottom is. Let's figure out where a neckline is. Yeah, gold is coming back down. Okay. Baller King, you're going in longs on NQ right now. I would be careful. I would be careful. You're buying a falling knife right now. What I would do quickly, if you're looking for buys, go on NASDAQ, go on the daily real quick, just really fast. See that big daily bar falling? Okay, where now will it where? Look. Okay, point of interest right there. I would go, excuse me, a little deeper right there. I'm losing my voice, guys. Yeah, I know it's the end of the week when I'm losing my voice because I talk too much on these calls. Right there. See what I just did? There's a wick, a body, a body, a body, a wick. If it comes down there, that yellow line. And then you see where there's all of this, okay? This is for NASDAQ today, guys. You see that little clump, all that in there? See that? The body, wick. We've traded in this green box. That there would be a really nice area. 22,700 in there. That's where buyers could be waiting. They bought on that day, they bought on that day, they bought on that day, and they bought on that day. Look at today's elevator, 2-day elevator coming down. So you see all all-time highs were on thin volume, thin volume, thin volume. If you look at your volume profile analysis, you will see that these successive moves making these all-time highs were on thin volume. Okay, so when I see thin volume making highs, I don't consider it to be strong volume. So that was kind of maybe artificially printed to make those highs. And now look at 2 days, they slam all that down. So that's that staircase going up, elevator coming down with heavy volume. Okay, so if you're buying, you've got to be careful. Look at what you're buying. That's big. If you even look on the weekly candles, look at the weekly candle. They pinned it, and look at this. This weekly candle might engulf 2-3 weeks worth of movement to the upside. Okay, so this could create the neckline for next week. You know, like when you're looking at this. Sorry, guys, we're on the weekly. I know we should be on the 5 minutes, but coming up, back down. Maybe if it finds some support here, or maybe down a little bit further down, it will come back up next week. Maybe we got a double top coming up in the next few weeks in the month of August, and then there could be this move coming down, right? Could very well happen. But rate cuts will be coming in September. If there's a rate cut, then we continue pumping for new all-time highs. Maybe we find a little bit of a bounce here, continue to move into September. Powell announces rate cuts, and then markets keep driving all-time highs. So let's just go back to these 5 minutes. And there it is. Okay, so there's that big green zone is down in here. Okay, so you got to be careful buying these fallen knives. See now how that purple line was the lowest point of the day and has been. I would just move this zone right down there. That would be a beautiful opportunity to sell a pullback today, right in there. Also with US 30, what I would do with US 30, bring it right down there now. That would be a great opportunity to sell right there, which was the lowest point of the day. Now they got it lower. That could be turning into resistance, that purple line. So you still see how it's bleeding out. Now you got to watch for like thin volume, spin top candles, a little bit of consolidation, maybe so we can start to reverse our way back up. But get your cut line. We still have not closed with a body above 50% yet. So it is still technically bearish. This is if you caught the sell. This is how you can trail your profits behind. Just go 50% of each candle. Like if I sold market open, for example, and I was doing the trailing strategy rule, and I have this massive volume complementing my move, that move closed, I would bring my stop loss from there to there. Next pullback goes, it shows me it got rejected, continue break. My stop loss now is above that wick right there, 50%. Next bar again, closes near the low. It already pulled back into 50%, got rejected. My stop loss, trailing stop loss would be right there right now. I would be doing the same thing, even with this candle. If it goes there and drops even further, my stop loss would be right there now. So you can capture that entire move. It pays off when the market cooperates and you can do it like that. SSDN, have a good weekend. Thank you for joining us this week. Oh, now you can hear the drill. Yeah, now you can hear it. Okay, so now we got a bullish bar, but we've seen that was a bullish bar, it went back down. That was a bullish bar, it went back down. That was a bullish candle, it went back down. This is a bullish candle, it could go back down. Okay, but let's see if we can get a first bullish candle, minimum close above 50% of a previous candle. And we still do not even have that. Even NASDAQ, look, it came up bullish, 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 right up to that red line and dropping it right back down. So you can see how much selling pressure is not coming from 5 minutes, 15 minutes. This is coming from the daily. This is coming from the weekly. This is way above you and I. So this is coming down with heavy, heavy selling pressure. Okay, and we haven't even established a bottom yet, right? So trading to get a trade set up takes time to develop. Sometimes even for a scalper, an intraday trader, you might be staring at volume for 2 hours before you get your setup. Okay, so that's part of trading. That's the patience. You don't want to just trade every single blue candle you see because you think it's got to go up. If you did, you would be in drawdown. Drawdown, drawdown. That could be your 3-strike rule and you're done trading for the day, where you should not even have been entertaining buys. Like, that's the psychological mental game you got to understand with the markets. Like, they love buyers right now because they're buying into sellers and sellers keep pushing them down. It's how the markets work, guys. That's why you got to train your brain to, when you see this, you want to sell pullbacks. I know I'm trying to sell pullbacks. I haven't had a solid opportunity. I could have sold like that wick. I could have sold there. Yes, I could have, but I was waiting more for the bigger zone up here, and the market still has not came back up to me. It's not to say that it won't ever come back up. It might have to be another hour from now. We might have this conversation. It might be noon today, and then it comes back up there. Then it goes back down. Okay, that doesn't mean that I don't have to mark up my charts and wait for it. That's what trading is: patiently waiting for the trade to come to you without forcing anything. But now we see it's bleeding out. RSI is now deeply oversold down to 25. Okay, so now you might see some buyers stepping in, but it would be better to be buying at this yellow line than just buy this random 5-minute candle. So maybe they will completely bleed it out because the market makers know that there's bigger buyers in here than just this level. Okay, so they want to continue to sell down because they want to exchange their position where the bigger buyers are. Okay, that's where the liquidity is. And this could be the first move coming back up. Again, first move. We got to figure out now. The second part of the puzzle is figuring out where the neckline is. Is the neckline going to be like right there? Will it come back down? Then come there? Then get that leg coming back up? All of these things. That's what you have to look at. Now we're getting these thin spin top candles. This is giving me a clue that now buyers and sellers are getting a little exhausted now. So this is where the market can start to maybe give you a clue that it could possibly start to reverse soon. Okay, so if you kind of want to consolidate where kind of these spin top volume candles are, then I watch to see how it builds in here. Yes, it could come back up, but it might not go all the way back up, but it could just come right back up to this red line and go back down. So if I'm taking that little counter buy from there to there, I know it's about 40 pips. Okay, I could even take this going into 10 a.m. because 10 a.m. new candle is opening. It could open with this momentum and just continue to go up. You also have a red folder news coming out at 10 a.m. Okay, so you got to be very careful. That might be good news, and that might be strengthening U.S. dollar from the bottom from the bigger drop, and then we see the markets rally on that. So your news coming in at 10 a.m. is right here. ISM manufacturing, okay, manufacturing news. Anything above 50 is like, that's your overall sentiment. Anything above 50 shows like expanding markets. Below 50 shows contracting. So it's 49.5 they set it at. So we'll see, will it come in above? If it does come in above 49.5, especially above 50, that's good for the US dollar. Same with ISM manufacturing prices, consumer sentiment report. Looks like consumers from 61.8 to 62 is their forecast. We'll see if that comes in hot. Construction spending, all of these things. You got all of these folders coming out in a few minutes. Okay, so we found one bottom. That's the first bottom already. So one bottom could come back down for a second bottom. Remember, the second bottom is technically the stronger leg because you're getting more buyers. You're getting more buying volume. Okay, and then we have 2 more minutes to go until they drop that news. So you see how it kind of impulsively broke up. It did make a new higher high just from these 2 bars, and then look at they're slamming it back down. Okay, so you got to understand counter trading rules. Don't buy until we see confirmations, right? This could continue to come down and trade in here. See, now you got a lot of indecision over here. Right prior to news coming in the markets. Guys, thank you guys on YouTube. I think at some point today we had over 500 viewers. I think that's a record high for us, for a while. So thank you guys. If you want to join us next week, hit the like button, subscribe to the channel, and join us next week because it's the first week of the new month, August. Oh man, and we went through the busiest week of the year. We had JOLTS job numbers, we had FOMC, we had NFP, we had massive earnings this week. This was probably the biggest week of earnings. So if you guys got through this and you guys made a profitable week, you need to pat yourself on the back. You need to buy yourself a steak and lobster tonight. You need to sit back and just enjoy and reflect. Reflect on this month. Go over your journaling and everything. Maybe some of you guys made a couple mistakes. Again, I make mistakes live daily. You guys see me make mistakes all the time. But let's come back and correct those and learn from them. That's what will make you a better trader. Sitting and crying and saying, why did I do this? Why? Go back and learn from it. It's a paid lesson. If I lose 100, 200 bucks on a trade, I got to go back. That's a paid lesson. It's like tuition. I got to get my money's worth. If I lost 100 bucks, $200 today on a trade, that cost me $200. I better go back and learn that lesson, and I better not do that again, because it might cost me again $200 in the future. Some lessons are $5,000. Some lessons, bigger lessons, are $25,000 for most traders. So, if even a $2 lesson is, I don't look at the price tag. I look at it as a lesson. Doesn't matter if it's $2 or if it's $20. Opening with news, bearish engulfed, coming right back down to this zone. Let's see now if it can spike out of there with maybe a wick, or if it will break right through here. Okay, news coming in. It might be released. Okay, so but bearish. ISM manufacturing bearish. Prices bearish. Wow, continuing dumping the US dollar, guys. This is not good. This is not good. I love to see what Donald Trump is going to say out of this. Look at gold. Came in the box on that shitty news. It's going right back up. Okay, and markets are continuing dump. That's why do not buy. Look at, they released that news, and those numbers are horrible. I want to see what Donald Trump is going to say all about this. Okay, this is on his clock. This is, guys, that's it for me. I got to go see what these guys are doing up there. I can hear them destroying my walls up there. I got to make sure that they're doing good. But look, it's completely dumping, guys. Don't be buying unless you see confirmations. Otherwise, continue selling pullbacks today. It could be one of those huge bearish Friday sell-off days. I don't think the market is going to reverse unless Donald Trump says something so positive that could rally the markets. Otherwise, just sell pullbacks. Listen to me. On NASDAQ and US 30 S&P, sell pullbacks at defined zones. Gold, buy pullbacks at defined demand areas. Gold will continue possibly pumping if the dollar drops. Maybe there's a little bit of a sympathy rally at the end of the day, but we'll trade all of this into next week, guys. Wow, Trevor, this has been your best week. Amazing. Congratulations, bro. We're very, very proud of you, Trevor. Trevor, I know where you came from. I remember when you came first day on YouTube, and then you signed up with us, and you're an inspiration to a lot of traders. So very proud of you, man. Congratulations. Well deserved. Just continue, Trevor, learning. Just continue learning. Keep compounding those pips and continue to learn. Learn and be disciplined, because now that's it. You got a bright future. You got a good head start. You can compound that account. Once you get that snowball rolling and you keep rolling it, it gets bigger and bigger and bigger. So just stay focused. Don't do anything reckless, because then you'll give back all of that, and then you got to start again, and with where you're demoralized. So just stay. I would even take maybe a couple of days off next week, just to refocus and come back focused. Because a lot of guys, when they have these type of weeks, they get a little carried away, including myself. So I know how that is. But amazing. Okay, so congratulations, everyone. Thank you, everyone on YouTube. We appreciate your support. Hit the like, subscribe to the channel. We'll see you guys Monday morning. Everyone on Zoom, I appreciate you guys. I have to cancel today's crash course because it's my dad's birthday. I'm going to take him out. And so we'll see you guys. Maybe I'll pre-record it this weekend and I'll upload it on the website for you guys. It was going to be on the bodies of candles. We did the wick analysis. I wanted to do a quick one on bodies for you guys. I'll record it on the weekend and I'll get it uploaded and I'll post it in the Discord. Okay, guys? Thank you guys so much. God bless everyone. Have a great week. Jummah Mubarak, and we'll see you guys Monday morning fresh. Let's hit these markets again, okay? Careful trading today. If you've already hit your daily, weekly, monthly goals, go out of the market and enjoy your day. You got a long weekend now. Go enjoy it. See you guys. Have everyone a good weekend. Red Clues, thank you so much for moderating on YouTube. I do appreciate you, brother. Thank you so much for helping me out. I appreciate it, guys. Have a good day. Have a good weekend. Thank you, guys.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.